If you can't beat 'em, then you pop 'em. You can't man 'em, then you mop 'em. You can't stand 'em, then you drop 'em. You pop 'em, cause we pop 'em like overridden vodka. C3, okay, a millionaire. I'm a young money millionaire.
Good morning, everyone, and welcome to the 22nd of January. It's a Thursday. We are ripping the daily stack this morning, and we have a fantastic lineup of guests. We have Caleb, we have Infra, and we have Dave on the live stream. So welcome, everyone, and looking forward to getting cracking on some macro and diving into what the hell is going on with rates, with Bitcoin, with the dollar, with initial claims, revenue growth on different US companies. So I guess let's hop straight into it. Infra, if you wouldn't mind maybe just giving us a quick 30,000 foot top-down analysis on just what the hell is going on in Japan, because the whole of Twitter has been up in arms about rates blowing out of their ranges, and it seems to be affecting markets everywhere. We've got Greenland, which is the narrative, I guess, but underneath all of it, we've just got an amazing amount of movement on these Japanese rates.
Yeah, so it was a 6 sigma event. We saw on the 30-year a move of 43 basis points in the matter of 2 days. Takaichi is the prime minister of Japan. She was elected, very, very populist, elected in a surprise election just a couple months ago. The market was not expecting her to win. She's kind of in the camp of Abenomics, right? Very loose, very dovish monetary and fiscal policy, and had a press conference. And one of the many things she said, but I think probably the main thing that was moving markets was a proposal to reduce the sales tax, I believe, on food. And that sent that, amongst other kind of dovish fiscal comments, sent the long end much higher, 43 basis points in 2 days. You really only have seen that in Liz Truss's moment in UK back in, I believe, it's 2022, 2023. You saw a kind of dislocation in their bond market a couple years ago. We also saw, I would argue, a dislocation here in early April with Liberation Day. But these sort of moves don't happen very often. Again, it was a 6 sigma, probability of this occurring, this sort of move. Now, we have gotten a bid back into the long end over there. A couple points that I would make with Japan, which is that number one, they certainly have a very high debt load, but when you look at the composition of that debt, just like the US, the majority of the debt that they're issuing is not in 30-year JGBs. It's not in 40-year JGBs. In fact, the two of those two tenors combined only make up like 4.5% of their issuance, so gross issuance. So number one, they're issuing a lot of short-term debt, much like the US. Point number two, out of all the debt, and there certainly is a lot of debt when it comes to Japan, sovereign debt, only 12% is actually owned externally, right? Their external debt to GDP is far lower than the kind of headline figure would have you believe. Point number three, the Bank of Japan owns 50% of their bond market. So the any interest just gets recycled back to the Ministry of Finance after the Bank of Japan covers, kind of minor operational costs, that sort of thing. It just gets recycled back to the Ministry of Finance. And of course, also, I would point out that Japan runs a very, very large current account surplus, which is much different, obviously, from the US. So yeah, we saw a huge dislocation in their rates, and that, of course, dragged rates all over the world, but especially in the US, dragged our rates higher. And again, you did get a bit of a bid come back over the past day and a half or so.
Okay, so I saw you nodding along there, Dave. Let's maybe just one more question for you, Infra, in terms of, if so much of the debt is held internally, why does the global bond market look so keenly on where yields are moving in Japan?
Well, so Japan was a very large kind of liquidity engine. They, in the period of time where they had negative interest rate policy, kind of the lost decades, right? We can see this pink line here is 0. They had negative overnight rate. They had negative 1-year yield. They had negative 2-year yield, negative 5-year yield, and the 10-year JGB yield was negative for moments in time as well. So they had negative interest rate policy, and of course that was done through QE yield curve control. And the yen was basically free. I mean, when we talk about the price of money, the price of money is the interest rate. So when you have what effectively, interest rates are very esoteric sometimes to normal people, but when you have a 0% interest rate or negative interest rate, what you are saying is the money is free. The yen in particular is free. And so what was happening was you were encouraging, incentivizing capital individuals to borrow that free money and then go invest it. And so this is the yen carry trade where, folks would borrow in basically free yen and then sell the yen to buy the dollar to then go buy US treasuries or US tech stocks or something like that. Well, once you started to get, this is kind of a massive beach ball of liquidity, driver of liquidity that was being held underwater with this policy of NERP and yield curve control. Once that beach ball got let go, that is what we're starting to see, which is the new equilibrium is higher for U.S. Treasury yields. We're probably going to see, a continued sell-off in the long end, so long as the fiscal policy remains loose. And so it's going to drag rates higher. Japan has been a large creditor to the U.S. For decades now. They were, before the Cayman Islands base trade news, they were the largest holder of U.S. Treasury debt. Well, a lot of that was pension and insurance funds. And again, they couldn't get yield in Japan. Well, once you start getting higher rates in Japan, a lot of that capital that was a result of the current account surplus, some of that capital might start to go back home. And that would be the yen carry trade in reverse, selling of U.S. Treasury, selling of dollar to buy the yen, to buy then the JGB, which would eventually stabilize both the dollar yen exchange rate and eventually rates at some point.
Gotcha. Okay, Dave, I saw you nodding along earlier. I was actually just Googling on the back end, what is 6 sigma probability weighted to? 3.4 defects per million. So 3.4 in a million is the possibility of that move.
I used to teach a class both at 2 Sigma when I was there and at Citi, where we analyzed these sorts of things. I will never forget in August of 2007, and those in quantitative finance that were involved in quantitative finance in 2007 will know what I'm talking about. We saw a 14 standard deviation event in what happened was it was a hedge fund that, and then a couple of others owned or controlled by Goldman Sachs and Goldman Sachs alumnus that were heavily into a value-based trade go boom. And so value stocks across the board got sold, completely blew out correlations, etc. What was the class? Well, what I would do is draw 2 graphs. One looks like a bell curve, and I can't really do it, basically your basic bell curve. And basically it says that when you're doing statistics, you're assuming the world is normally distributed, and a normal distribution has a thin good outcome tail and a thin bad outcome tail, and most of the probabilities are in the middle. And so when you look at a 6 standard deviation event, you go way, because the thickness of the tail on the bad side of the distribution is so small, you have to go way out in terms of standard deviations from that mean. Except for the world is not normally distributed. When it comes to financial markets, the distribution looks more like this: a big fat tail, a big thing in the middle, and another big fat tail. Why? Crowded trades. Everybody tends to jump on the same trade. And so what you think is a 6 standard deviation move, which should only happen at a ridiculously small frequency, actually happens quite often. Why? Because the world's not normally distributed. So while I'm nodding when Robert's talking about the rarity of it is based upon a flawed assumption that the world is rational, and the world is not rational.
Exactly.
So
It's that logical
was the
fallacy.
point there.
The logical fallacy of a bell curve in theory makes sense, but in reality, human psychology isn't taken into account when measuring those probabilities. So you
like
end up
lemmings,
with
they go off a cliff.
Exactly. So like the idea of a 6 sigma event technically should be impossible in our lifetimes, but it's recurring often.
It happens all the time
because of the lack of accounting for human psychology, right? So
right. But the other reason I was nodding is because what Robert is talking about, and he kind of soft pedaled it, which is interesting because usually Robert is much more strong on this point. But the whole Cayman Island point is non-trivial. So it's not so much that the Cayman Islands are the biggest holders, that there are some people in the Cayman Islands say, we love U.S. treasuries, we want demand. No, that's not what's happening. What's happening is, and let's just pull it up because I had it up here. Hold on a minute. Bonds. Here we go. What's happening is U.S. 10-year bonds yields, is yielding 4.25, and Japan yields 2.25. Well, yeah, I mean, if you're in Japan, 2.25 is a hell of a lot better than 1.5, which is what it was before all this mishigas happened. But the truth is that there are people in the Cayman Islands who say, well, listen, if I can borrow, and I know that the yen, that if I borrow in yen and I owe yen, the yen's not going to strengthen very much. If anything, it might weaken. Then they're going to still happily borrow yen, buy on a levered basis U.S. long bonds and agencies and high yield, and it's mostly a yield play. And so they buy this stuff. And so you're borrowing at whatever. If you're borrowing at 10 years, you're borrowing at 2.25. If you're borrowing at 2 years, it's whatever that is, et cetera, et cetera. There's still a lot of money to be made on that trade. The risk that they generally take is the currency risk. And if you look at it, there's always this fear that if the yen weakens too much or strengthens too much, that the Bank of Japan will intervene. We're right now, but by the way, if you've borrowed yen, you don't mind if the yen weakens.
Yeah.
What you mind is if it gets and what they're terrified of is that if it gets back towards 160 again, which it was recently, that the U.S. will give them swap lines and it will get brute force back to 150 and they'll get pummeled on their investment. So that's what they're worried about. So you need to understand that these global capital flows, leveraged finance, the amount of economic derivatives so dwarf all the other markets. And the treasury market may be the largest market in the world, but the derivatives in the treasury market are the real largest market in the world. And so when people talk about the yen carry trade, that's what we're talking about. What I find funny on this show is people look at the yen carry trade and say, well, that's why Bitcoin's being sold. And all I can say is you people are doing some serious drugs. If you think that the power of the yen carry trade is what's pushing up Bitcoin, all you have to do is look at silver to know that that's not true. Because silver is a much bigger market now. It didn't used to be. A year ago it wasn't, but it certainly is now. And the yen carry trade isn't influencing that. I mean, this morning I saw people on the timeline saying, oh, okay, we've hit the silver plateau, it's done, and now we're back to 96 again. So understand there is a lot of plumbing in the world's financial system.
Yeah.
And the yen carry trade is a very important part of it because of all the structural reasons Robert mentioned. Yeah. It is a manipulated market, so it's more or less considered stable, right? Because, it decreases risk. If you look at that risk and look at volatility, which every risk model uses volatility, they make assumptions that what has been low volatility will continue to be low volatility. So when they see a 6 standard deviation event, what's the first thing that happens? Well, the risk models say I have to de-risk. And so that's why we saw a little bit of a hiccup a few days ago.
Yeah, and they're bound to follow those risk models. There's no variation from that. It's something that they have to because their incentives are directly aligned with that regarding their jobs, right? I mean, it's their
in a lot of cases, yes, that's exactly.
So, I didn't want to loop in Caleb as well. Caleb, what's your take on all of this? You're kind of you're a macro expert, but you also dabble in a lot of different, like your views are very diverse. So curious to kind of get your take on this specifically.
Look, the more we talk about the yen and the yen carry trade and what's happening with Japanese government bond yields, if you want to go to my screen on this, I posted this in real time when the unwind of the yen carry trade was getting everyone spooked out of their socks, saying in 3 years and likely much sooner, you're going to laugh at the fact that you were worried about the yen carry trade. I'm already laughing because everyone seemed to be running for the hills. I remember we had stocks gapping down that morning and everyone was running for the exits. And I'm looking at it, I'm saying, what the hell is everyone so scared about with the Japanese yen? And what's happening in Japanese government bond yields. So, This to me is relatively, I don't want to say it's insignificant because that sounds so dismissive, but in a lot of ways it is. Let's think about this from the perspective of actually being investors. Okay, so if Japan is such in the shitter, and I'm not saying anyone on this stream right now is alluding to that, but why are Japanese stocks trading like this since 2023?
Even in
this is the
dollar terms.
Yeah, exactly. So this is the Wisdom Tree Japan Opportunities Fund. They also have one for the hedged currency exposure, and it looks the exact same, right? So this is just, ballooning essentially. And it's business as usual, right? So okay, this was the unwind of the yen carry trade that everyone was so worried about. This thing was trading at basically $30 per share for the ETF, and now it's above 50, I think that's pretty hilarious. David mentioned something about silver. I want to highlight this chart right here. It's something I've been sharing just relatively recently. This right here is the Japanese 10-year yield overlaid on top of gold since 2024. So, I love how he mentioned silver because the chart would basically look the exact same here as well. If we're trying to think about what's happening in terms of the Japanese government bond market and trying to think about what that means for us as investors, how we should maybe be positioned, or so on and so forth, I think this is basically giving us that signal, right? It's one trade here in a lot of ways with this relationship between gold and Japanese government bond yields. As those yields are going up, reflecting less demand for Japanese government bonds, investors are looking for another safe haven, right? Because historically, the yen has always been the second most significant safe haven outside of the dollar and US Treasuries. And so if that's no longer a safe haven as perceived by investors globally, they're looking for an exit. They're looking for another opportunity. So funny enough, I didn't bring this chart with me, but those of you at home can look this up. If we overlaid the Swiss franc relative to the Japanese yen over this chart, it also looks the exact same. So in my opinion, that would be the third most significant risk off asset. But I don't view this trend here in Japanese government bond yields as a risk off signal. Because if it was a risk off signal, then US stocks wouldn't be higher, international stocks wouldn't be higher, and certainly Japanese stocks wouldn't be higher. And they all are.
Well, yeah, because Japan, that current account surplus, weaker currency actually benefits them. Unlike, in the US, where it would just cause inflation because we run such insane trade deficits. Yeah, in Japan, a weaker currency actually benefits them. And it's like, I think it's very notable that the Nikkei has gone up, not just in yen terms, which you would kind of expect to some degree, but it's gone up in dollar terms. And I think that point is missed by the folks that claim that Japan is imploding and, it's all this global catastrophe to financial markets. It's not, you're not seeing an emerging market capital flight like you are in the US, or you were, right? Where bonds down, stocks down, currency down. You're not seeing that in Japan. The Nikkei has been quite strong, again, even in dollar terms. Yeah, the bond market's been pretty weak, and you've had the currency pretty weak as well, especially after the Takaichi was elected. But you're seeing strength in in equity. So no one ever talks about the reason that rates started to move higher in Japan either, which was a fundamentally good reason, which was after decades of economic contraction, negative GDP, negative wage growth, deflation, they finally started to get some growth, some heat in their economy. And so rates started to move higher. You had the Bank of Japan kind of step back from buying of long-term JGBs, and rates moved higher. We've gotten so brainwashed or something to see higher rates and automatically think bad. The 10-year, if you're going to have a high nominal growth environment, for example, like President Trump is saying, say 8% nominal growth, you're going to have a higher 10-year yield. That's just how it works. So, of course, unless they artificially suppress it with QE, but yeah, when you finally start to get some heat in an economy after 20 years of economic contraction, negative wage growth, deflation, you're going to get higher rates. And that's what started to happen years ago. Now, I will say that, part of the move higher in rates, you don't want to see a dramatic bear steepener where you have 230s, blow out by like 35 basis points. You don't want to see that. That is not necessarily a sign everything's great in your bond market. But I'll point out that there was an illiquidity element of this as well, which was the turnover that day was only $280 million worth. So it was very, it was their bond market is clearly not very liquid. nowhere near as liquid as the U.S. Treasury market. It wasn't a huge amount of capital that caused that move to happen in the first place.
Well, it's mostly a retraction. The Bank of Japan didn't fight it as much.
Yep.
It's like, you're watching arm wrestling. The Bank of Japan is like buying half. All of a sudden they go, well, they stop buying a little bit. All of a sudden it starts to move. I mean, it is notable, by the way, gold just went over 4,900 as we were talking.
Wow.
And silver's at 96 and change right now, as I mentioned. I mean, look, people talk about debasement trade, but there's which it sounds great, except for, whatever. I mean, let's call it what it is. All of the markets of the world, basically every single country, is spending more than it is taxing. Every single one. And to make up that fiscal dominance, that you need to create money. And therefore, it devalues the amount of money, and therefore assets priced in that money, whichever one you're talking about, will be higher, unless you're Bitcoin over the last few months, and we can talk about why that is. But the truth is that there's just a natural tailwind to nominal asset prices, and you can't do anything about that. So when you look at gold and silver, that's what you're seeing. When you look at Japanese government bonds, it's a bit different. There, the question is the issuance. As Robert said, the government doesn't care nearly as much. They just don't want it to get out of control. Financial markets and capital raising markets hate uncertainty. And so I am sure that at Davos that Besant and the Treasury Secretary of Japan have had conversations, just like he did with Milei, which, by the way, I remember all the Bitcoin bros, and I yelled at them, and Robert was on some of these spaces where I yelled at them, where they said, "Oh, we're printing money to buy, to buy the Argentinian currency. Why are we doing that? That's not America first. It's whatever." And I basically told them they were a bunch of morons, because they are. They don't understand economics. And I said, chances are we're going to make money on the trade, and we'll be out of it because we're fundamentally on the right thing. Guess what? And if any of the people who listened to or on Bitcoin today remember back and rewind the tape to those days, you will see Dave 1 and Dark and a bunch of those other guys 0, because they keep getting this stuff wrong. The exact same freaking thing is happening in Japan. Guaranteed.
So what are they missing then, I guess, Dave? What are they missing that's so critical?
There's an old expression in Wall Street: don't fight the Fed. And at the end of the day, that morphed into the Fed had a put and whatever. But at the end of the day, if I'm going to war and I have a gun, I don't want to be fighting someone who has a howitzer. And ultimately, when the largest economies of the world, and in such a manipulated world that we live in, have a howitzer, don't bet against them. Now, there are occasions, and I'm writing a book talking about, going through the early part of my life as Wall Street changed as a technologist. I'm literally on the chapter which talks about what Soros did vis-a-vis the pound and what happened in Italy that summer, where I was the trigger man for Soros's incursions in the Italian equity market. I literally know, because I managed those program trades that slammed that market down. And I'm writing that chapter. There are occasions where the guys with the howitzers attract a swarm of bees and they lose, but it's few and far between. And we are not in that kind of a world. So betting against the United States and Japanese treasuries that they're going to somehow lose control of the situation without any other exogenous event. I mean, it could happen, but it's exceedingly low likelihood. And people in particularly Bitcoiners who naturally, for very good reason, distrust fiat currencies, just assuming this is the big one and it's all going to fall apart, I think is funny. I mean, there was an old TV show, and I'm dating myself. Sorry, you could watch it on reruns. Sanford and Son, and Red Fox was the comedian, and in every episode, his wife had died. He would put his hand over his heart. Oh, this is the big one. I'm coming to see it. Right?
Yeah.
People who just assume, every once in a while, like the people who get famous, like Michael Burry for making the big call. The problem is you have to look at these people and see if you've called for a massive crash 100 times. And the one time it happens, you happen to be right. It was that right? Did your people who follow you make money? You have to look at that. I am telling you, what I'm saying is, Robert is pointing out meta trends in a responsible, intelligent manner that people understand it. There are people who take what he says and say, you see, this is proof that something really horrendous is going to break. It's almost certain. And therefore invest, take that as their investment advice. Whereas Caleb, what you're doing is basically saying, you're saying what I'm saying, but funnier. Right?
Maybe. I
Well,
don't
yeah,
know.
I think, yeah. Sorry, go for it, Caleb.
No, go ahead. Go ahead.
Well, no, I think that's interesting. I think there's so much recency bias and just biases in heuristics in general that people take for granted. Because at the end of the day, like human psyche is so vulnerable to being manipulated. It's also challenges your ego to even question that in the first place, which is kind of why looking at facts and data is so important. When we're going through all these charts and these macro trends on the Thursday shows. So with that being said, I do want to hop over to Bitcoin specifically because this is something that's everyone's really talking about. Is Bitcoin continues to trade like very much a risk on asset, and as things deteriorate in stocks, Bitcoin is still highly correlated to that. So it's not following the narrative of digital gold. I know we're not there yet, but I would have personally, to be totally transparent, hoped that it would have at least shown signs of it moving towards this digital gold narrative. But maybe it's one of these kind of black and white scenarios where one year it isn't, and then another year it isn't. So then another year it is. But I would have again hoped that there would have been a tighter correlation to gold and silver in this stage, given the narrative that Bitcoin has formed in a lot of institutions' minds, right? That's what it's been pitched as. So I guess Rob, let's start there. You've got the chart on your screen, and then we'll go to Caleb as well because I'd love to get his perspective. He's analyzed this for years.
Yeah. So back in the summer 2021, Bitcoin dollar price was $35,000 per Bitcoin. Bitcoin price in gold, it was about 18 ounces of gold per Bitcoin. Today, with the Bitcoin price basically 3x what it was back then, about 90,000 per Bitcoin. The Bitcoin priced in gold, it's still exactly the same. So 18 ounces. We've underperformed gold to a significant margin. Obviously, we've gone nowhere since the summer 2021 in gold terms. I think that, a lot of Bitcoiners, part of the reason we hold Bitcoin is we have a understanding that the denominator, the dollar is failing. Well, if you have that view, why are we talking so much about the dollar price of Bitcoin? We should be talking about Bitcoin priced in gold or something. I mean, find a I use gold as my measuring stick, but if there's a better one out there, I'm open to suggestions. But we need to start, pricing Bitcoin in gold terms. I mean, this is arguably what it's competing against. It's not competing against I mean, some can argue it's competing against the dollar as a medium of exchange. I think that's nonsense. I think Bitcoin is a competitor. The best way to think about Bitcoin is as a bank reserve, a monetary asset that is, that forms the kind of monetary base rather than the M2, which is, kind of the broad money that's used, checkable deposits and that sort of thing, used in kind of everyday life. I think Bitcoin is much more of a reserve asset that would function much more like a bank reserve does, rather than a dollar of M2. And I think that, in a world of increasing gold adoption by sovereigns, right? If you look at FX reserve holdings of gold versus U.S. Treasuries, gold has overtaken U.S. Treasuries as the primary reserve asset.
Yeah.
Which brings up a whole other can of worms. There's many implications from that, but that is where Bitcoin should be competing. So, if we're trying to target gold, if we're trying to target that sort of use case, then we need to denominate Bitcoin in gold.
Yeah, and I think when I think about the use case for Bitcoin, I think what makes logical sense to me is if you were to look at the top 1,000 holders of Bitcoin, what would they say if you ask them what's the use case behind Bitcoin? And if their answer is store of value, then that's what we should consider Bitcoin's use case to quote unquote be, given the largest holders. I mean, obviously we can't ask them that question, but it would be pretty interesting to ask Satoshi what was his intended quote unquote use case for Bitcoin, and then
Adam Back said that it was to compete with bank reserves as a monetary, the M0 monetary base sort of instrument. I'm pretty sure it was Adam Back. One of those OGs, I mean, wrote that was where he saw Bitcoin competing, not as a broad money M2 medium of exchange.
In which
Yeah,
case,
I'm
gold
pretty
is
sure it was
perfect.
Adam back.
If it is Adam back, and it probably was, then gold is probably the closest analogy we have to measure such a source. If that's the case, though, then I guess, Caleb, for you, that my question was, we've been sitting at what appears to be the bottom of this range for a while now. When the hell are we going to start reversing like the gold BTC ratio? Because it's been pretty ugly for the last 3-6 months, right? As gold has been ripping and Bitcoin hasn't even been holding itself. It's kind of just gone down from the 120K peak.
Yeah, but I mean, what isn't in a downtrend relative to gold over the past several months, So, I actually don't spend a lot of time looking at the Bitcoin to gold chart. It can be interesting, and maybe there are some insights there. You could point to the failed breakout to new all-time highs that occurred, and the fact that we then produced a lower high after that, confirming the nature of the recent downtrend. For me, what's interesting is we can philosophize about what Bitcoin should be and what it likely could be in the future, and I would basically agree with everything Robert just said. But we live in the now and the present. And in the now and in the present, Bitcoin continues to trade like a risk on asset. This is where it's really important for investors to embrace nuance, because it is really frustrating to look at the Russell 2000 up 1.3% today, continuing to make new all-time highs. Value stocks, new all-time highs. S&P 500, new all-time highs. Equal weight S&P 500, new all-time highs. Semiconductor stocks, new all-time highs. And we're looking at Bitcoin and we're saying, what the heck? What's going on here, right? If you wouldn't mind actually going over to my screen really quick, this is actually what's taking place. Is there is a sufficient amount of risk appetite in this market environment to push stocks, broadly speaking, at the index level to new all-time highs. However, there is not a sufficient amount of risk appetite to reward the extremely speculative areas of the market. And so in this chart right here, I'm overlaying Bitcoin in orange, hopefully relatively obvious, versus ARKW, the ARK Next Gen Internet ETF. Guys, they peaked on the exact same day. So, there is not some idiosyncratic Bitcoin risk taking place here, the same way that there wasn't some idiosyncratic Bitcoin risk taking place in Q1. It's just a measurement of risk appetite. If we want, we could even remove ARKW and instead look at IGV, which is the tech software ETF. They also peaked basically within a week of each other and continue to trade the same way. So this is a market environment where a handful, if not the majority, of speculative areas within the market are struggling. It's not a Bitcoin specific issue. So if we're trying to think about when is Bitcoin going to stop going down, first of all, I think we're in a new bear market for Bitcoin. I'm saying this as someone who thinks that Bitcoin's going to 500,000 and $1 million over the long run, and hopefully significantly beyond that. But we can't let that long-term outlook detract from the fact that Bitcoin historically has had 50, 60, 70, 80% drawdowns during bear markets. And so if we're only down from 124 to 89,000 today, I do think we're going to make a lower low, because that's exactly what bear markets do. They produce lower lows and lower highs. As far as I'm concerned, that's going to be the direction of the trend for the foreseeable future.
Dave, come on. I see you shaking your head there. And
the funny thing is there's a world in investing, you get self-fulfilling prophecies. And so when you ask yourself, why are things happening? Caleb just told you why. It's because most of the people who own most of the Bitcoin believe what he does, which is, and while Caleb is not like what I'm about to say, because there's two camps here. There's the financial market aware and understanding people in the Bitcoin community who actually understands that there's context. And then there's a whole bunch of people who absolutely have no fucking clue how financial markets work. And so you have this idea, this 4-year cycle myth. Now, the 4-year cycle myth is funny because according to the 4-year cycle, 25 should have been a really good year, and 25 did absolutely nothing. Actually, over the year, it was down. So, the 4-year cycle was gone. There was no up. Now, if there is no up amplitude, and think of it this way, whether or not you believe in a particular thing, Elliott wave, this wave, that wave, nobody who's ever studied behavioral finance will ever tell you that there isn't truth to the matter, that amplitudes on upside and downside do tend to balance. Even in stocks that go way up, there's down waves and up waves. Well, when the amplitude of the up wave is 1/5 or 1/6, in fact, actually negative, in the case of this 4-year cycle, to expect the amplitude of the down wave to be as big as it used to be is, well, I mean, wrong, insane, dumb. I don't know what word you want to use. It doesn't mean it can't happen, but it does mean it's not happening for that reason.
Well, sorry, Dave, just to clarify, when you're saying the amplitude of the down wave, you're suggesting that Caleb is assuming we go back down to what, 60K? And you're saying that that's just an overblown assumption to make because that drawdown is just way too large in your opinion? Or
well, I mean, there are people who think that it's going to go down to a lot lower than that. Obviously, anything can happen. Okay. You know, in markets, anyone who sits there and tells you this will never happen generally goes bankrupt, or at least loses their entire bankroll and has to start again. Right. So people over leverage leaning on prices all the time. So I'm not saying it can't happen. I'm saying that as a base probability, it's exceedingly unlikely to happen. And the reason is it would have already happened.
So I guess the first assumption that we're making, and Caleb, maybe you can clarify, what is your underlying justification for why you think we go down there? Is it a reversion to the mean, which I'm personally sympathetic to, or is it part of this 4-year cycle? Because if it's the 4-year cycle, then if the correlations that you're showing on screen would suggest that the ARK ETF is also subject to a 4-year cycle, which doesn't make logical sense. Do you know what I mean? So I guess that's important to clarify, because that's part of what Dave is saying, is that it's difficult to predict the future because of all these biases and heuristics and the fact that probabilities never play out the way we think they do.
Sure, yeah. So look, I don't believe in the 4-year cycle. I believe in price action. And so when price action is emblematic of a downtrend, aka the production of lower lows and lower highs, we're invalidating key structural levels, we're falling below key moving averages that were intact the entirety of the bull market. That to me represents a change in character from bullish characteristics to bearish characteristics. And so if I'm going to be objective, if I'm going to look at that data and try to use it to make the best possible decisions that I can, I don't know how low Bitcoin is going to go. I'm not going to say on this podcast exactly where I think it's going to head to, but what I do know for a fact is that right here, right now, it's producing lower lows and lower highs, especially relative to something like the S&P 500, where it's already fallen below those April of 2025 lows. So where is it going next? I don't know.
But probabilities would suggest lower, is what you're saying.
Yeah, exactly. And so I have an invalidation for that criteria as well. If we get back above 101,000, I'm going to say we're off to the races, back to the upside again. So for every outlook that I share, I'm always going to have some sort of invalidation criteria, because believe it or not, we're wrong in this game all the time, right? Even Steph Curry doesn't make all of his 3-point shots. So we can't expect ourselves as investors to be right even 60, 70% of the time. So we always need to have some invalidation criteria. So for me, if we get back above 101, I think we're going to be off to the races again, I hope. And look, I'm saying all this as someone, by the way, who has the majority of my net worth invested in Bitcoin, right? So I'm braced up and ready for the bear market. I'm ready for the production of lower lows. I think we're going to take out those November lows, and I think we're going to move back towards those April lows of 2025.
Can I just highlight something of just how incredibly important what the underlying of what Caleb is saying is for people who are listening? What Caleb is telling you is something that people, they listen, they hear sound bites, and then they ignore. But the most important thing, what he's saying to you is, if you're trading technically, do not over leverage yourself. Do not screw up your time preference. I mean, over leverage. I mean, you have tight stops. You understand exactly what it is. You have a thesis and you follow it. That is important. And so, you know, look, I follow Caleb and I find his posts very insightful. I don't necessarily always agree with them, but it doesn't matter. My time preference is different than somebody else's time preference, right? My time preference is that none of this is going to mean a damn thing in 5 years. That's my time preference. And honestly, because of the tax implications of selling Bitcoin, I'm not selling any Bitcoin, because anything I sell, I'm paying the government, you know, a pretty substantial amount of, right? You know, it's like, even if it's 25%, because thankfully I live in Florida, so I don't have to pay the state of New Jersey an extra 10%. I don't want to take those hits. Now, does that mean you don't trade? No. My point is the context is different. When we go back to 2021 and we talk about Bitcoin Gold or Bitcoin this, understand that even after a decrease in the hash rate and the strength of the Bitcoin network, it's still more than 6.5 times where it was in 2021. Now think about that for a heartbeat. So when you look at, so in 2021, the exuberance level, it got ahead of itself, undeniably. And so if we use that as a baseline, of course, it's going to be wrong, or at least it's going to have fundamental flaws. Bitcoin vis-a-vis digital gold is not going to be a straight line. It's going to be, my favorite meme is the one that says what people think hodling is like, and it's a straight line upwards, up and to the right. And what it actually looks like, and there's pits with snakes in it, all sorts of stuff. And it looks like you just crawl through barbed wire to get there. That's the truth. Right now is one of those periods of time. Right now, we've been in since October 10th in particular, we have been, that was like that was very, very similar in a respect to Luna. And Luna culminating with the FTX low was around, what was that, 6 months, almost exactly, from Luna's collapse through to the GBTC meltdowns, through Celsius and Voyager and FTX. It was 6 months. It is possible that the order of magnitude here, which was arguably 1/3 the aggregate size, but in terms of number of people was probably broader in terms of the number of people who participate in crypto that got absolutely wrecked. So to expect, and I said at the time, someone called me today, and just, a TradFi guy I've known for a long time. He said, the day after this happened, the Macro Mondays show, I said, guys, this is going to take a lot of time to unwind. And unwinding is going to look different than it did last time. Because if there are no forced bankruptcies, it won't be a collapse in price. It will be sluggishness. It will be things that drive people crazy. And when you look at the fear and greed index today, down at 20, I mean, that's what's happening. I'm calling this time-based capitulation. I've been doing so. So wait till March, April. Maybe it'll happen in February. I don't know. Eventually, the market finds its footing. And then some of this price action that you're looking at might be different. Now, maybe there could be another bad thing. Who knows? Trump could go and raise tariffs again, whatever. There's so many different weird things that happen. The stock market could have a March crash because all the people who made money last year have to sell to pay their taxes. That's happened before. Typically, when that happens, it recovers by the mid-year to anyway, even in really bad times. So, there's lots of things that could happen. But my base case is we've been in a bear market in terms of crypto winter like stuff for Bitcoin and the altcoins, man. I mean, look at Solana. I mean, if you're going to tell me that Solana at 120 something isn't a bear market compared to where it was 6 months ago, well, then your math needs some remedial work. Then you're like those people that California school system are graduating that can't read or write. You have to look at it that way. So, we are clearly in a bear market, have been for at least 4 months. And the real question is, when does it end? And, in the history, if you go back to looking at another asset class, the S&P 500, what's the longest bear market it's had since 2009? Robert, have you tracked that? I don't know the answer to that question, but I'm going to guess it's not very long.
Yeah, not very long.
I'm going to guess
Probably.
3 or 4 months would probably be as large as you're going to get. So if you ask me, why do I look at the 4-year cycle as piffle? Well, because we've been in a nonstop bull market with like several 2, 3, 4 month bear markets in the S&P dating all the way back to the beginning of 2009. That's going on now 16 plus years, 17 years now. So I think Bitcoin could do the same thing. And I wouldn't be remotely surprised to see that be the case. And that's going to create some very interesting price action.
Yeah. The one thing I will say, Dave, just to that I am sympathetic towards is the lack of liquidity in the market at the moment following 1010, which could suggest that if there was a downward move or a surprise to the downside, that would validate what Caleb's saying. And again, he's talking probabilities, maybe 51% chance we go down, 49% we go up. I'm not saying that's what it is. I'm just saying that I am sympathetic to the fact that even in bear markets, you do see crazy stuff like that happen, especially because of the lack of liquidity following that, that catalyst, which was I think is going to be our FTX moment of 2025 of this cycle.
Yeah, I mean, I will point out something that you're absolutely right, that when you get into a range like this, and this range has been way tighter. I mean, if you look over the last month, the Bitcoin's realized volatility is way lower than most of the Mag 7, by the way, way lower. And now that was true, for a month. Now it's been true for 3 to 6 months. I mean, way lower. And just think about what that means. Most models think of Bitcoin as being tremendously speculative, but compared to NVIDIA or even Netflix, which isn't in the Mag 7, it's been lower volatility. If you look at implied volatilities, what the options market's pricing, that's been fascinating, because we saw this. Well, first of all, it started to pick up, even though Bitcoin has done nothing over the last week. It's realized volatility actually has decreased. Implieds have gone from, well, I'm using BitBo, so whatever their number is, from 1% or below 1% to 1.28% on the 30-day. We've also seen a convergence of the 30 and 60-day. It was at the widest it had ever been about a month ago, and now it's getting down toward normal things. The 6 days still a bit higher. So there's clearly a lot of people out there who believe that January was destined to be a meh month, and that we'd start seeing action in February, March. And so that's just empirically, that's what people are putting their money in the options market on. That's not a question of a theory. That's just how it is. So there are a lot of these cross currents going on. But the one thing that is absolutely true is the tighter the range, the lower the realized volatility in a period, the higher the likely realized volatility will be in the subsequent period when that regime changes. And that is to the downside or the upside. That is not even remote. That is not bullish nor bearish. It's simply saying that things are going to break one way or another in all likelihood. And the longer it doesn't, the more you will get that break, and the more violent it will be. Does that make sense?
Yeah, the IV on IBIT is in the 8th percentile in terms of 52-week.
What percentile was that?
8th percentile.
Right. So now ask
incredibly
anyone
low.
who would have put that on their bingo card when they bought IBIT.
So, I mean, if that's the case, then it's time to go long IBIT vol, right? I mean,
yeah, that's the way I trade. Yeah.
Sorry for giving away your secret sauce, Robert.
Well, no, you look, when implied volatility is high, you sell volatility, and when it's low, you go long volatility. Yeah, I think I personally, I'm not super bearish. Does it go to 60K? Maybe I'll just buy more. You know, I'm not really worried. If anything, I'd be happy if we got a further pullback from here, because I can buy more of an asset that I like with the same amount of dollars. When Bitcoin's going up, your wage in dollars is getting devalued. So personally, I get paid in dollars. I don't like when my time and my effort is devalued. So yeah, I'm okay if we go to 60K. I'm okay if we go to 50K. I'll buy even more. Personally, I do agree with the correlation to kind of high beta tech. I use like Palantir. You can look at SPY market cap weighting versus RSP. A lot of that stuff peaked right around the exact same time as Bitcoin peaked. Bank reserves also. Generally, when bank reserves and on the liquidity side, on the Fed, on the monetary policy side, generally when bank reserves are bottoming and start to head higher, Bitcoin follows and generally has pretty significant run. The Fed has printed $200 billion just in the past 2 months when it comes to new bank reserve creation as part of the RMPs. So yeah, on the liquidity, I don't know. I'm bullish for the next 5 years, 10 years, but I'm also bullish for the next 1 year. I think we have, we have very strong growth. Nominal growth has been reaccelerating going all the way back to April, and the chaos when everyone is saying, oh, we're going into a recession and all that. I was saying, no, if anything, nominal growth is going to reaccelerate. We've had higher and higher nominal growth ever since. And it looks like if you listen to every single policymaker that matters, they're going to run it hot. They want negative real rates. I don't see how negative real rates is anything other than hyper bullish for things like Bitcoin. And I think that the fiscal impulse coming from the one big beautiful bill is going to juice the economy even more. We've been seeing a broadening out. If you look at what's been doing well, XLK has been underperforming materials, energy, consumer staples, basically everything. And so it's kind of a reversal of the 2022 through 2024 kind of regime where there's 5 companies doing really well, holding up the entire index. We're seeing the market bet on a broadening out. IWM was mentioned, new all-time highs, equal weight, all-time highs. I think that generally the macro backdrop from a fundamental standpoint is good. If I thought we were going into a recession, I'd be the first one to be worried and buy protection, buy IBIT puts or something. But I don't see that. I think that there's going to be heightened volatility with policy, as we just saw over the past week. But I don't like a sustained bear market down to like 10K, like particular person is saying. Like I don't see it. The Fed's printing money, literally, with the RMPs. That'll probably extend out in duration. They'll probably extend out the curve with that. We see long end rates are not staying super well behaved. So that'll probably eventually turn into the notes and then eventually bonds. And they'll go out the curve. And yeah, like I think that, you know, the amount of populism, the amount of spending that's going to come, there's already a big fiscal impulse from the One Big Beautiful Bill. They're going to juice that by something, I don't know, stimmy checks, some sort of kind of populist stimulus measure. Now, you know, there are kind of, again, policy uncertainty when it comes to things like the credit card interest rate cap that could cause a credit contraction, and all of my bullishness could be proven wrong. You know, there's all sorts of like kind of not black swans, but gray swans out there.
Yeah. Caleb, I wanted to throw it over to you because I know you brought a bunch of interesting charts, especially on kind of GDP growth, on earnings as well, and maybe on revenue growth, which I think would be interesting and kind of play into what Robert is talking about here. So let me bring up that.
Let's go over this one here. I love the Bitcoin conversation. I love macro. But macro actually doesn't pay us as far as I'm concerned, right? We don't get paid based on GDP growth numbers. We don't really even get paid based on unemployment rate data. What we get paid on is the net present value of future cash flows, and that's price. We buy low, we sell high, or we buy high and we sell higher. That's how we make money in the markets, right? And so if asset prices themselves are the best crystal ball that we have for the future, in addition to this chart that I'm about to show right here, what we're looking at is the S&P 500 overlaid over 12-month earnings per share. Earnings per share quite literally are those future cash flows because that's what these companies are generating in terms of earnings. And so when we think about whether or not this rally in the market is justified or not, you know, all we have to do is look at this chart and recognize that forward 12-month earnings have been making new all-time highs since the end of 2023, and we have continued to be in a bull market in that environment, right? So I think this is fantastic data because you know, the stock market, unfortunately, or fortunately, depending on who you are, is not the economy, right? So again, we don't get paid based on certain macro data. We can use it to therefore make extrapolations in terms of price, but what we're actually doing is buying and selling price. So I just focus on price itself, right? And that's why I think this is really, really critical. And this is probably the most relevant macroeconomic data that we could possibly fathom. The second order of magnitude on this, which I think is really important, because I mentioned this data in the past on other shows, and people will always inevitably say, well, oh, Caleb, these companies have just gotten so much better in terms of constructing different accounting gimmicks to make their earnings per share look like they're going up. Let's suppose that's true. What we also know is that companies cannot lie about this next number, which is revenue, right? And so when we look at each sector in the S&P 500 and the revenue growth that they're producing on a year-over-year basis, we have information technology stocks growing revenue 18% year over year, healthcare stocks 9.1% year over year, financials 8.7, industrials 5.8, utilities 4.7, consumer discretionary up 4.6, all in an environment where something like retail sales is up something like 4% year over year, Redbook retail sales up 5.7% year over year. We have a lot of really good constructive data in this backdrop, which in my opinion continues to justify tailwinds for the index level, right? And this is again where we need to embrace nuance because those tailwinds at the index level may not necessarily ripple down into the ultra speculative names within the stock market, right? They may on some individual cases like space exploration stocks that are making new all-time highs right now. But, you know, look at quantum computing stocks, look at a lot of nuclear stocks. You know, they're not necessarily doing well in this environment. And then look at something like ARKK or ARKW or IPO stocks, ticker symbol IPO. Those are all struggling, right? So we need to bifurcate a little bit what's actually taking place between the stock market and a market of stocks, because those are actually two completely separate things. This data, in my opinion, is really good for the stock market, not necessarily for the market of stocks.
Yeah, what's good for the real economy, a broadening out, seeing consumer staples and discretionary and energy and materials and RSP outperforming, IWM outperforming the market cap weight. Yeah, what might be good, I would argue all those indications of a broadening out are the best for the real economy. Might not be good for the market, depending on what you're trading if you're in those high beta areas.
Yeah, I think what's interesting about this is because it's not solely representing that upper end of the risk spectrum, it gives a much more broad analysis on what's actually going on. I think it would be interesting to like look to dive deeper into each of these sectors to see if there are more speculative components of these sectors that are also underperforming, similar to ARK, or if it's just specifically tech and kind of that Mag 7 group of stocks that are broadening out.
Well, I find one thing fascinating about this chart. I mean, that is actually quite a few things that matter, but one of the interesting ones, if you look at the S&P 500, the prediction of revenue growth of just under 8%, when we know money supply growth is probably somewhere in the 6 to 8% range and has been for a while. What it's basically telling you is, in terms of if you denominated it all by the number of dollars that are going back into circulation, the S&P revenue growth is more or less keeping pace with the devaluation, and it's telling you the technology is doubling, more than doubling that. And then things like energy, because of the better ability to frack and get more energy out of the ground, at least, has been dramatically lagging it. Because, there has been this assertion that people have made, which is buying the S&P has performed really well, but that's only because we've debased the currency. We continue to print more.
Yeah,
Right?
versus gold, the S&P 500 is in a bear market, right?
Right.
This is
Well,
why
which
I
is
think
good.
it's so
Well,
so
but this is
important
telling
to-
you that at least the current, the right now, if you're at 7 or 8%, you'll keep pace. So the S&P and gold will probably stay roughly around the same. They'll, of course, move around each other because that's how things go. Now, a lot of gold bugs that I've known, because I've been involved in following gold bugs for longer than some of the audience has probably been alive, believe it or not. But certainly since the early 2000s, when I bought my first ounce of silver, the gold bugs would tell you that gold is undervalued relative to its percentage of monetary aggregates. Back then they thought gold should be at 5,000. Today, given that monetary aggregates have more than doubled, they'd probably say somewhere around 12 to 15,000. And obviously in here, most of the people are yelling, "Hey, look how great gold is! It's at 5,000." Meanwhile, the true gold bugs are saying, "Well, the goalposts have shifted, and really it should be higher." That leaves a lot of room for a new store of value to come in, and that is a very important point, because the biggest single thing that has happened in the world of Bitcoin, just to bring it back to that, why it's not really a speculative asset, is the newer buyers of Bitcoin are longer term, time preference buyers in general. Of course, not all of them. I don't want to see comments like, "Come on, Dave, I know people are buying IBIT for a trade." When you talk to the CEO of Bitwise, Matt Hogan, or when you talk to salespeople at BlackRock, they will tell you that most of the people buying are putting a portfolio allocation on a multi-year time horizon.
Yeah.
Most of the selling that we've seen over 2025, a lot of it certainly, and now, have been from the crypto community itself. And this is a double-edged sword. The same people who are saying Bitcoin is being co-opted, it's not what I got into it for, etc. Sure, that's selling pressure, and that's going to cap price action. Absolutely. On the other hand, the same people, if you ask them, how in hell do you expect Bitcoin to replace gold if it's not held by, basically 80, 90% of the population, at least in some form or another? Because gold is. I mean, pretty much everybody has at least one gold bracelet, gold thing. Everyone owns some gold. Not everyone owns some Bitcoin. And that matters. And so it has to happen. That rotation has to take place. No one ever said it was going to be easy. No one ever said it's going to be uniform, but it has to happen. And so we're in that situation. And so that's going to cause all sorts of outcomes. And I think it's as simple as that.
Yeah. Well, guys, I mean, I'd love to continue this conversation, Caleb. I feel like we had at least another hour or two to go just with some of the stuff that you brought in the charts. Dave, thank you so much for hopping on. It's been fascinating, and appreciate the dialogue in a respectful manner. And I think it was great back and forth between everyone. Infra, same thing on your end. Really appreciate your insight. We are going to call it there because we are at the top of the hour, or the half hour. Thank you, everyone, for tuning in. Appreciate you. We will see you next Thursday at 12 Eastern. Have a good one.
I said the hip hop, the hip it to the hip hop. You don't stop the rocket to the bang bang boogie. Say up jump the boogie to the rhythm of the boogie to beat. Now what you hear is not a test. I'm rapping to the beat, and me, the groove, and my friends are gonna try to move your feet. You see, I am Wonder Mike, and I like to say hello. Up to the black, to the white, the red, and the brown, and the purple, and yellow. But first, I gotta bang, bang, the boogie to the boogie. Say up, jump the boogie to the bang, bang, boogie. Let's rock. You don't stop, rock the rhythm that'll make your body rock. Well, so far you've heard my voice, but I brought two friends along. And next on the mic is my man Hank. Come on, Hank, sing that song.
Check it out, I'm the CASN, the OVA, and the rest is FLY. You see, I go by the code of the doctor of the mix, and these reasons I'll tell you why. You see, I'm 6'1", and I'm tons of fun, and I dress to a T. You see, I got more clothes than Muhammad Ali, and I dress so viciously. I got bodyguards, I got two big cars that definitely ain't the whack. I got a Lincoln Continental and a sunroof Cadillac. So after school, I take a dip in the pool, which is really on the wall. I got a color TV so I can see the Knicks play basketball. Him and talking my checkbook, that it costs more money than a sucker could ever spend. But I wouldn't give a sucker or a bum from the rock, not a dime till I made it again. Everybody go, hotel, motel, what you gonna do today? Is I'm gonna get a fly girl, gonna get some spank and drive off in a death OJ. Everybody go, hotel, motel, holiday inn. Say if your girl starts acting up, then you take her friend. I'm Master G, my mellow is on you, so what you gonna do?
Well, it's on and on and on and on and on. The beat don't stop until the break of dawn. I said a M-A-S, a T-E-R, a G with a double E. I said I go by the unforgettable name of the man they call a Master G. Well, my name is known all over the world by all the foxy ladies and the pretty girls. I'm going down in history as the baddest rapper that ever could be. Now I'm feeling the highs and you're feeling the lows. The beat starts getting into your toe. You start popping your fingers and stomping your feet and moving your body while you're sitting and you're sitting. Then damn, you start doing the freak. I said bam, right out of your seat. Then you throw your hands high in the air. You rock it to the rhythm, shake your dairy air. You rock it to the beat without a care. Cruise the short shot MCs for the affair. Now I'm not as tall as the rest of the gang, but I rap to the beat just the same. I got a little face and a pair of rhyme eyes. All I'm here to do, ladies, is hypnotize. Sing it on and on and on and on and on. The beat don't stop until the break of dawn. I sing it on and on and on and on and on like a hot butter. The pop, the pop, the pop, give it, pop, the pop, pop. You don't dare stop or come alive, yo. Give me what you got. I guess by now you can take a hunch and find that I am the baby of the bunch, but that's okay. I still keep in stride, cause all I'm here to do is just a wiggle your behind. Sing it on and on and on and on. The beat don't stop until the break of dawn. I sing it on and on and on and on and on. Rock, yo. Throw it on the floor. I'm gonna freak you here, I'm gonna freak you there. I'm gonna move you out of this atmosphere, cause I'm one of a kind and I'll shock your mind. I put the jiggles in your behind. I say the 1, 2, 3, 4, come on, girls, get on the floor, come alive, yo, give me what you got, cause I'm guaranteed to make you rock. I said 1, 2, 3, 4, tell me Wonder Mike, what are you waiting for?
To the hip hop, the hippie to the hippie, the hip the hopper, you don't stop, rock it to the bang bang, the boogie, say up jump the boogie to the rhythm of the boogie to beat. Well, skittle bebop, we rock a Scooby Doo, and guess what, America, we love you, cause you rock and a roll with us so much so you can rock till you're 101 years old. I don't mean to brag, I don't mean to boast, but we're like hot butter on a breakfast toast. Rock it out, a baby bubba to the boogie, then bang bang, the boogie to the beat. Beat is so unique. Come on, everybody, and dance to the beat. Hip hop, you don't stop. Rock it out, baby bubba to the boogity bang bang, the boogie to the boogity beat. I say I can't wait to the end of the week when I rap it to the rhythm of a groovy beat and attempt to raise your body heat or just blow your mind so with that you can't speak or do a thing but I rock and shuffle your feet and later change up to a dance called the freak. And when you finally do come into your rhythmic beat, rest a little while so you don't get weak. I know I
I guess we're going back live.
Absolutely.
Well,
Do you want
welcome, fellas.
more in the middle here?
Yeah, we are gonna. Yeah, you guys are gonna get it nice and close here, I think. Yeah, I guess whoever's talking maybe jump in when we're ready here. But we are live with thousands of people watching right now, so very excited. So joining us today are the founders of Arch, a platform that's quietly redefining how the world's most valuable digital assets are financed. So we have Dhruv Patel, CEO, and Himanshu Sahay, I hope I pronounced both those right, the CTO. Between them, they got DNA from both Bridgewater and Brex, and they're bringing that old world financial rigor to the Bitcoin age. They just made history, and we'll definitely talk about the $75 million tokenized CLO on Avalanche alongside Galaxy, which is a move that basically turns loans into a legitimate institutional class within Bitcoin. If you want to know the biggest banks in the world, they're finally looking at Bitcoin as real collateral. We have no one else really to thank besides Dhruv and Himanshu, and you guys are building the future of Bitcoin lending. So welcome to the Daily Stack.
Thanks for having us. Thanks, Avi.
I gotta ask, we're coming off a few big news stories, right? So I think the Fed injecting about $55 billion in the system this week to fight some of the macro volatility. So I'm curious to see if you guys are starting to see some of this capital filter down into the Arch platform yet. And does this macro environment make your market lending rates? I know you guys just changed those too. So very excited to have you touch on that piece.
Yeah, I think additional liquidity in the market is going to compress rates, and it has for us already. So we're passing that benefit off to the client. As our rates drop, our client rates drop, so that's good for everybody. We just announced rates from 8.49%, which is, we're finally in the single digits. People have been asking us for years, when are you going to get into single digits? When are you going to get close to mortgages? We finally are. So our interest rate now starts from 7%, and there's a small origination fee. So quite comparable to a mortgage. And I think it really brings the benefit of the Bitcoin-backed loan down to everybody who is comparing this against more traditional assets, opportunities in credit. I don't know if you want to speak about that.
Yeah, I think, just additional money being pumped in the system, it typically finds its way filtered towards more risk assets, and Bitcoin being one of those perceived assets that's a little further on the curve. And so you should see either that start to move like price action, or just continually deepen the base of new holders of Bitcoin, which both are beneficial for Arch, as you have either new clients or folks with an existing loan that now has more wealth in Bitcoin that can upsize the loan, just given we function like a line of credit.
Yeah, we should probably take a quick step back, because I know we have listeners, that are Bitcoin maxis, have been around for forever and are familiar with you guys. But for those that are not familiar, can you guys explain the benefits of why Bitcoin lending even exists today?
Yeah, so credit is a key component of any asset class, Bitcoin being a great example of it, right? So you can hold your Bitcoin, but you can't do much with it, right? You can maybe you can sell it to get some liquidity out of it, but then you lose out on the upside, and you have a tax event. And for people who are in here who've had Bitcoin for a long time, that tax bill, because their purchase price can be quite significant. So now you can borrow against your Bitcoin, but there's been a lot of attempts at borrowing in the past at lending, which have sometimes not been great. We solve all of those with a very first-in-class, security-first approach. We hold all your assets in qualified custody, which means it's at a federally regulated bank, Anchorage Digital. They're segregated, so we can prove to you that we don't touch your assets at all during the loan. We share the address with you, so you can verify exactly where they are. And our rates have come down to a point where it's quite digestible for a lot of people out there.
Yeah, and maybe, Avi, the one thing I'll add is that this isn't new with respect to borrowing against your assets. People have done this for decades and even longer against their house, stocks, gold, etc. This is just something that Bitcoiners are now being made more aware of, and we're leading the charge here.
Yeah, and I know you mentioned stocks. Elon Musk has leveraged his Tesla holdings quite a bit, throughout time. Have you guys seen now, we've seen the FTX collapse, so the elephant in the room, everyone's thinking, we've seen, these unfortunate situations happen. One, what are you guys doing to prevent that happening for your clients? And then I guess just recently we had a pretty big liquidation event, I think a couple days ago, right? So I don't know if that impacted your business, and how do you guys protect against that?
So we were started in the wake of FTX, Celsius, BlockFi, etc. collapsing. So we've learned from those mistakes, and we do things very differently. I think this is where the CLO conversation is interesting, because the reason a lot of them collapsed was how they were using their client assets, right? So you had depositors on one side getting yield in dollars or USDC, and borrowers on the other side. That capital from depositors was going to the borrowers, and that's how the interest was generated. Now that creates a lot of issues of duration mismatch. If I'm a borrower and I come to get my capital back, but it's being lent out, I can't get it back. And if there's a bank run where almost everybody comes to get the capital back, there's no capital to give back. So that's what create a lot of issues. There were also rehypothecating assets. We don't do that. So we don't generate any new Bitcoin. We just let it be there in qualified custody. And we are regulated. So a company like BlockFi got hit by the SEC for essentially running an unregistered securities product. We are fully licensed and regulated where we operate. I think we're live in 40 states right now for consumers and a few more for businesses. In these, we have a lot of oversight from all the regulators. We do exams from all the regulators every year, and we have to prove that we actually do what we say we do, which is following all the processes, all the LTV levels, and not rehypothecating at all.
I don't know if you had anything to add there.
I think essentially, like, Himanshu covered it all. It was, and then the second piece of your question on the liquidation events. For us, it was we're unimpacted. I think many of our clients are at very healthy LTV levels. We allow up to 60%, but many of them choose 50% or lower, just given they want to add an additional buffer on the volatility. And then our system gives fully automated notifications as the price is dropping, just to allow our borrowers to know that, because many of them are not actively monitoring the pricing, which enables them to top up and add more collateral or partially pay down the loan in real time. And as a result, we didn't have any impact over the last few days, and even the persistent volatility that's been there over the second half of last year. And then the second piece to touch on Himanshu's point about the no rehypothecation, I think if we double click on how capital is raised, so we've raised a CLO structure, which we'll talk about, I'm sure, a little bit more as well. But this was what we tokenized in the news that was announced last week. What that is essentially us raising capital in a structured format from sophisticated institutional investors. So Galaxy Digital, Grove, which is Steakhouse Financial, and we have other folks in the mix as well that we'll be announcing as they come on. But this ensures that our capital is coming from a set pool, which doesn't enable us to rehypothecate. We don't need to send our client Bitcoin elsewhere in order to secure capital for the loans.
No, it's very interesting. And who would you say, like, is your primary user? I'd imagine like Bitcoin whales is a pretty obvious one, some institutions, but I was just talking about this before the show with your lower rates now. Are people using like STRC at like 11%, getting their Bitcoin back and then adding 3%? Is that some of like the newer folks that are coming in using these financial products?
You're not the first person to suggest that. We were at Strategy World last year before STRC was really hot, and people were trying to do this with some other assets out there, and people do it as dual leverage. However, our asset base, our client base is really wide. I think some of the widest in the industry, because we serve both individuals and institutions. So you can be Joe down the street borrowing $5,000 for cash flow purposes, or to buy a watch, right, or anything small, and then you have a public company on the other end borrowing $50 million to go buy more Bitcoin, or to fund an acquisition or expansion or anything. So it's everything in between. I will say our average customer is a high net worth individual or a smaller institution, and they typically borrow in the high 6 figures, low 7 figures.
Yeah,
and use cases are quite varied. So it's investments. We funded businesses across the country. We funded big movies, racetracks, coffee shops, lots of real estate purchases. A lot of people will use us to buy a house, to buy commercial property. We've funded data center operations. We've funded lots of miners. It's a really, really wide use case. Also, just big life events, engagement rings, God forbid, medical payments, stuff like that.
Yeah, tax season's coming up too, and I imagine
Tax
some
season is
people
a big one.
had a
Tax
good
season-
year, and yeah.
We actually have a
Um,
product.
I was curious. Oh, sorry. Go ahead. I think there may be a little gap there. Go ahead.
Oh, you're good. I was just going to add, speaking of tax season, we have a product that we launched last year, which lets you use the 100% bonus depreciation to borrow against Bitcoin, invest in qualifying capital investments, which in this case is mining infrastructure, and depreciate that full purchase amount against your taxes.
That's very cool. I wanted some more information about this, and if you guys, don't know too much, feel free to say next question. But the Clarity Act, right? So last week, you see the headlines. That's been a hot topic. But founders that have basically prioritized this regulated framework from day one, do you see legislation as leveling the playing field, or you saw Brian Armstrong talking at Davos now as well. Just curious, kind of for the layman's out there that are listening that just see the headlines, like you guys could share what's happening and what was the pushback here from our space.
Yeah, so I can maybe start by saying for us, it's not as impactful just given we operate as a lender. And so there's clear guidelines with respect to the different lending licenses on a state-by-state basis. However, what some of the nuances of the bill we're looking at was more stablecoin issuances and whether or not stablecoins can have yield that are then passed on to their end borrowers. And so you sort of mimic a high yield bank account or things that the neobank and like traditional banks are offering. And then the other piece is also with respect to custody. Again, not impacted by us because we already operate this way, meaning all of our clients' assets are held at a qualified custodian, Anchorage Digital. But part of that bill is also stripping out custody from exchange services and other such services for retail offerings so that there's a clear segregation between where the client assets are held and the company that's providing these services. So I would say on our side, from the Arch perspective, there's no impact to this bill, just given we had operated in a quite clean-cut regulatory environment as a lender. But those were some of the main nuances of the bill that have had other companies commenting on.
Oh yeah, I think the reason Brian Armstrong has seesawed around this and is maybe now anti is because Coinbase, as you know, operates custody on an exchange, and this would require Coinbase to divest one or two of those businesses, which obviously he wouldn't want to do.
Yeah, there's always more underneath the hood, so it's interesting. And one of the questions when I go through, we have 21 rates, obviously, and so we go through a lot of the different lending platforms. One thing that kind of stuck out to me was the UX and the actual usability. It felt like I was almost in a Robin Hood, where the problem I think big time with this whole industry is they're built by engineers and they don't really think about the user experience of who's actually going to be using it. So curious if maybe, your time at Brex or Bridgewater is even an older institution. So not sure if you took some stuff from there as well, but curious how much, time and what was that thought process making it, a perfect UX experience for people. Or UI, and just genuinely, how have you guys thought about building this for the user?
No, I was going to say, so the learnings I had from Brex and Bridgewater apply a lot more to the financial know-how and operations, whether it's the risk management, how we raise capital, etc. But the design and UX is a lot of just Himanshu's expertise, as well as the team that we've created on the engineering side, just given its best-in-class consumer companies, whether Snap, Bird, Tinder, Google, etc. That's really a team that's hyper-focused on making sure every step of that consumer flow is up to par with some of the best consumer apps out there.
And Avi, it's interesting that you mentioned that. We do have our clients. If you look at our Trustpilot, we have hundreds of reviews, and people write essays about the experience. And not just saying this is the best crypto app they've used, it's the best financial product they've used. And I think, as Dhruv mentioned, bringing some of that consumer expertise. I used to work at Snapchat before I started the company with Dhruv and Dhruv at Brex, as you know. We really got a chance to use to build products at scale, not to thousands of users or even millions, but to hundreds of millions of users. When you do that, the experience and every little detail is so much more important, because even a small issue can affect a ton of people, way more than you can imagine just sitting at a computer building a product, right? So that's really important. But our UX has been a work in progress just from customer learnings. I think one of the benefits of our platform is the customer service. Every single page on the dashboard has a chat bubble. You can chat with us in real time, ask any questions you like, and you can book a call with us anywhere. So people speak to us all the time. I would say we speak to almost all of our clients. So someone's on the phone in the office at all times. As a result, we know what they're thinking, and we use all that feedback to improve the product iteratively every day of the week. Now, I will say there's a fully redesigned UX coming out. We have previewed that with some clients in beta already, but it's going to be miles and miles ahead where we are today, and I think that's going to be another great iteration of our product.
Yeah, we'll have to do when that happens, let us know, and we'll do like a quick product review. Now, I know in the Bitcoin space, every day feels like a month, and every month's like a year, right? But how far ahead are you guys thinking? You got to focus on your core business, obviously, but then 5 years out, 3 to 5 years out, are you guys looking to add new products, and how does that ideation go through? And you guys as entrepreneurs, like, how do you guys test that maybe with beta clients and see if they're interested? Like, how do you guys go about that? And I don't know if you guys can tease anything out that's you're building in beta today.
Yeah, absolutely. So I think if we step back, like Arch's vision is to build the next generation private banking wealth management platform for Bitcoiners and like digital asset holders, right? We started with Bitcoin-backed loans, and that is a very broad but powerful product. And on top of that, we've built products that are tailored towards niche use cases. So we have a product called Perpetual Income. Under the hood, it is a series of Bitcoin-backed loans, but it's built for higher sort of like net worth Bitcoin holders that either don't have a cash flow, like a W-2 income stream, or are retired. As a result, they can think about just depositing a certain amount of Bitcoin and getting access to a certain cash flow stream on a yearly basis. And you can think about it as if you put $1 million of Bitcoin as your deposit, you should be able to safely take out $100,000 a year and do that over an extended period of time, because Bitcoin is also appreciating as we continue. And so that was one product. Another one, as Himanshu talked about earlier, was Tax Shield, more for high income earners that want to deduct against their taxable income. So we will continue to launch more and more tailored lending use cases for specific audiences. And then in addition from that, we'll have additional products. And so one that we'll be launching very soon is the ability to trade and custody and stake your digital assets. And so that will be at some of the most competitive rates on the market, as well as additional like card offerings and things that the team is always thinking through. Our roadmap is determined also from our clients. As Himanshu mentioned, we speak with almost all of them. And so we are constantly learning what they want to do with Arch, what pain points they have in other areas, so that we can build out the best holistic offering for them.
Very cool. And I think we have about like 1,500, 2,000 more people actually joined since we started. So you guys must have brought the crowd here. But I do want to double tap for those that were listening. And I think it's really important too, because, in real estate, people are familiar with like this 1031 exchange. Can you talk us through again, just like, I know you're not accountants, but in terms of like, how does this work from, are you getting back the exact same Bitcoin? How do you guys, avoid getting taxation as a customer? If we can just double tap again into that, I think that's very important.
Yeah. So essentially we are a lending product. And so a loan is not a taxable event. When you're sending over your Bitcoin, that Bitcoin does not get rehypothecated. It simply sits at a qualified custodian. We use Anchorage Digital. And for the duration of your loan, you're making the monthly interest payments. And once you pay off that loan, that Bitcoin comes back to you. And so there is no taxable event that happens here. I will say the nuances is you can also, depending on what you use the loan for, you might also qualify to deduct the interest that you're paying on the loan against your taxes. And so I believe that is there if you're using it as a business, or you use the loan for business purposes or to make certain qualified investments, that people would have to talk through with their own tax specialist. But those are the sort of nuances. A loan broadly, even if you take out a loan against your stocks, your house, none of that is considered a taxable event.
Yeah, no, I think it's really important, because I've been following even like Grant Cardone. There's so many people now on Instagram that have these like things that are legal with taxes that just people, unfortunately our education system doesn't like focus on financial literacy, and that's something, I hope to see change, but go ahead.
are interested in just learning more on the tax side, because we do have like a tax advantage product as well. We do partner with a couple of Bitcoin specific tax advisory firms, and we can put you in touch and have a free consultation if you need that.
Yeah. You guys have like, I'm just going to your website too. You guys have a great blog, but just resources galore. You guys got a help center blog. You got your newsletter. You guys partner with Mark Moss as well. So you guys got some big things going down in the pipeline. Anything that I missed and didn't ask about that you guys would want to touch on?
I think just like really hammering in on the rates. I think rates are something that have been a point of contention for a lot of people who think that paying 12, 13, 14%, which was the case last year for a Bitcoin backed loan is too much. We agree. We're Bitcoiners ourselves. We primarily hold Bitcoin in our own portfolios too. But it's a combination of getting the traditional capital markets in on that and understanding how to price this asset and how to like charge us, right? Because at the end of the day, we're paying someone for the capital that we raise, and then we charge a very small spread and then give the rest to the client. Now, because the rates have come down with the tokenized CLO, we can pass that benefit off to the client. And I think that's really important to know that one, the rates are continuing to come down, but today is definitely a big watershed moment where it really combines traditional capital markets with the benefits of borrowing against your Bitcoin.
No, I think that's a good point. And I just brought up 21rates.com, which is a company that we started to actually track a lot of this. So we have all the lenders, and we've just updated you guys to 8.5. So you are currently the lowest, but
8.49.
8.49. We do have to fix that up then. A quick shameless plug there for that as well. But yeah, thank you guys so much for coming on. We're excited to partner with you guys as well for this upcoming season, and hope to see you guys around.
Thank you, Avi. Appreciate it.
Yep. And for those listening, we do have another podcast coming up here very shortly with Threshold. So we're going to pause here for about 5 minutes, but then come back on with the new guest. So thanks so much, guys.
Thanks.
Rest a little while so you don't get weak. I know a man in Hank. He has more rhymes than a serious bank. So come on, Hank, sing that song to the rhythm of the boogie, bang, bang, the bomb.
When I'm imp, the dimp, the ladies pimp, the women fight for my delight. But I'm the grand master with the 3 MCs that shock the house for the young ladies. And when you come inside and to the front, you do the freak spank, I do the bump. And when the sucker MCs try to prove a point with Trent's trio, or with the serious joint, from sun to sun and from day to day, I sit down and write a brand new rhyme because they say that miracles never cease. I've created a devastating masterpiece. I'm gonna rock the mic so you can't resist. Everybody, I say it goes like this. When I was coming home late one dark afternoon, reporter stopped me for an interview. She said she's heard stories and she's heard fables that are vicious on the mic and the turntable. This young reporter I did adore, so I rocked the vicious rhyme like I never did before. She said, damn fly guy, I'm in love with you. The Casanova legend must have been true. I said, by the way, baby, what's your name? Said I go by the name Lois Lane, and you can be my boyfriend, you surely can. Just let me quit my boyfriend called Superman. I said, he's a fairy, I do suppose, flying through the air in pantyhose. He may be very sexy or even cute, but he looks like a sucker in a blue and red suit. I said, you need a man who's got finesse and his whole name across his chest. He may be able to fly all through the night, but can he rock a party till the early light? He can't satisfy you with his little worm, but I can bust you out with my super sperm. I go do it, I go do it, I go do it, do it, do it. And I'm here, and I'm there. I'm Big Bang Hank, I'm everywhere. I just throw your hands up in the air and party harder like you just don't care. Let's do it. Don't stop, y'all. Take a talk, y'all. You don't stop. Go home, tell, motel. What you gonna do today? Some gonna get a fly girl, gonna get some spank and drive off in a death OJ. Everybody go home, tell, motel, Holiday Inn. You say if your girl starts acting up, then you take a friend. I say skip, dive, what can I say? I can't fit them all inside my OJ, so I just take half and bust them out. I give the rest to Master G so he can shock the house.
It was 12 o'clock and one Friday night. I was rocking to the beat, feeling alright. Everybody was dancing. dancing on the floor, doing all the things that never did before. And then this fly girl with a sexy lead, she came into the party, she came into the scene. As she traveled deeper inside the room, all the fellas checked out her white ass shoe. She came up to the table, looked into my eyes, then she turned around and shook her behind. So I said to myself, it's time for me to release my vicious rhyme. I call my masterpiece. And now people in the house, this is just for you. A little rap to make you boogaloo. Now the group you hear is called Phase 2. And let me tell you something, we're a hell of a crew. Once a week, we're on the street just to cutting the jams and making it free for you to party. Got to have the mood to we'll get right down and give you a groove. For you to dance, you got to be hot, so we'll get right down and make it rock. Now the system's on and the girls are there. You definitely have a rockin' affair. But let me tell you something, there's still one fact, that to have a party, got to have a rap. So when the party's over, you're making it home and trying to sleep before the break of dawn. And while you're sleeping, you start to dream and think of how you danced on a disco scene. A name appears in your mind, yeah, a name you know that was right on time. It was Phase 2, or just a doing a do, rocking you down, cause you know we could, to the rhythm of the beat that makes you free. Come alive, girls, get on your feet, to the rhythm of the beat, to the beat, to the double beat that makes you freak, to the rhythm of the beat that says you go on and on until the break of dawn. I got the man coming on right now, he's guaranteed to no doubt. He goes by the name of Wonder Mike. Come on, Wonder Mike, do what you like.
I say a can of beer that's sweeter than honey, like a millionaire that has no money, like a rainy day that is not wet, like a gambling fiend that does not bet, like Dracula without his fangs, like the boogie to the boogie without the boogie bang, like collard greens that don't taste good, like a tree that's not made out of wood, like going up and not coming down. It's just like the beat without the sound, no sound to the beat. You do the freak, everybody just rock and dance to the beat. Have you ever went over a friend's house to eat and the food just ain't no good? I mean, the macaroni soggy, the peas all mushed, and the chicken tastes like wood. So you try to play it off like you think you can by saying that you're full. And then your friend says, Mama, he just being polite, he ain't finished. Oh, that's full. So your heart starts pumping and you think of a lie and you say that you already ate. And your friend says, man, there's plenty of food, so he piles some more on your plate. But while the sticky food's steaming, your mind starts to dream of the moment it's time to leave. And then you look at your plate and your chicken's slowly rotting into something that looks like cheese. So you say, that's it, I got to leave this place, I don't care what these people think. I'm just sitting here making myself nauseous with this ugly food that stinks. So you bust out the door while it's still closed, still sick from the food you ate. And then you run to the store for quick relief from a bottle of KO Pectate. And then you call your friend 2 weeks later to see how he has been. And he says, I understand about the food, babe, but we're still friends. With a hip hop, the hippie to the hip of the hip hop, you don't stop the rocker to the bang bang boogie. Say up jump the boogie to the rhythm of the boogie beat. I said, Hank, can you rock? Can you rock to the rhythm that just don't stop? Or can you hit me to the shooby-doo? I said, come on, make the people move.
I go toot the horns and then ring the bell because I am the man with the clientele. And if you ask me why I rock so well in Big Bang, I got clientele from the time I was only 6 years old. I never forgot what I was told. It was the best advice that I ever had. It came from my wise and dead old dad. He said, sit down, punk, I want to talk to you. And don't say a word until I'm through. Now there's a time to laugh, a time to cry, a time to live and a time to die, a time to break and a time to chill, to act civilized or act real ill. But whatever you do in your lifetime, you never let an MC steal your rhyme. So from 66 to this very day, I'll always remember what he had to say. So when the sucker MCs try to jump my style, I let them know that I'm versatile. I got style, finesse, and a little black book that's filled with rhymes, and I know you want to look. But the thing that separates you from me, and that is called originality, because my rhymes are on from what you've heard. I didn't even bite, not a got word, and I say a little more later on tonight, so the sucker MCs can fight all night. I take a jock, y'all, a beat y'all, let's rock, y'all. Get no stop, go hotel, motel. What you gonna do today? Cause I'm gonna get a fly girl, gonna get some spank and drive off in a death OJ. Everybody go hotel, motel, Holiday Inn. You say if your girl starts acting up, then you take her friends. I like that, y'all. To the beat, y'all. A beat, y'all. You don't stop. A Master G. A Mom Mellow is on you. So what you gonna do?
Well, like Johnny Carson on the a late show. I like fucking Crocker in stereo. I like the bar case singing Holy Ghost. The sounds I throw down. They play the most, just like my man, a Captain Sky, who's named D-Earn with the super sperm. We rock and we don't stop. Get off, y'all. I'm here to give you what you got to the beat that it makes you freak. Come alive, girl. Get on your feet. I like a Perry Mason without a case, like Farrah Fawcett without her face, like the bar case on the mic, like getting right down for you tonight, like moving your body so you don't know how. Right to the rhythm and throw down, like coming alive to the Master G, the brother who rocks so viciously. At the age of 1, my life begun. At the age of 2, I was doing it too. At the age of 3, it was you and me, rocking to the sounds of the Master G. At the age of 4, I was on the floor, giving all the beats what they bargained for. At the age of 5, I didn't take no jobs with the Master G. It's all the way live. At the age of 6, I was picking up sticks, rapping to the beat. My thing was the. At the age of 7, I was rocking in heaven. Don't you know? I went off. I gotta run on down to the BTC, getting right on down, making all the girls just take off the cuffs to the beat to the double beat that makes you free. At the age of 8, I was a really great, cause every night you see, I had a date. At the age of 9, I was a right on time, cause every night you see, I had a party rhyme. We're going on and on and on and on and on. The beat don't stop until the break of dawn. We're staying on and on and on and on and on like a hot minute. Cause I'm a hell of a man when I'm on the mic, and I am the definite freaks the lie. I'm a hell of a man when I'm on the mic. I am the definite freaks the lie. You call me the Master G, you see, the brother who rocks so viciously. And it is every year, cause I'm all the kind of rock shots to rock. I'm going to the trees and the toes around. The best Master G, get it on, tag it all around.
I said the hip hop, the hip it to the hip hop. You don't stop the rocker to the bang bang boogie. Say up jump the boogie to the rhythm of the boogie to beat. Now what you hear is not a test. I'm rapping to the beat, and me, the groove, and my friends are gonna try to move your feet. You see, I am Wonder Mike, and I like to say hello. Up to the black, to the white, the red, and the brown, and the purple, and yellow. But first, I gotta bang, bang, the boogie to the boogie. Say up, jump the boogie to the bang, bang, boogie. Let's rock. You don't stop, rock the rhythm that'll make your body rock. Well, so far you've heard my voice, but I brought 2 friends along. And next on the mic is my man Hank. Come on, Hank, sing that song.
Check it out, I'm the CASN, the OVA, and the rest is FLY. You see, I go by the code of the doctor of the mix, and these reasons I'll tell you why. You see, I'm 6'1", and I'm tons of fun, and I dress to a T. You see, I got more clothes than Muhammad Ali, and I dress so viciously. I got bodyguards, I got 2 big guns that definitely ain't the whack. I got a Lincoln Continental and a sunroof Cadillac. So after school, I take a dip in the pool, which is really on the wall. I got a color TV so I can see the Knicks play basketball. Him and juggle my checkbook, that it costs more money than a sucker could ever spend. But I wouldn't give a sucker or a bum from the rock, not a dime till I made it again. Everybody go, hotel, motel, what you gonna do today? Is I'm gonna get a fly girl, gonna get some spank and drive off in a death OJ. Everybody go, hotel, motel, holiday inn. You see, if your girl starts acting up, then you take her friend. I'm Master G, I'm out mellow, it's on you, so what you gonna do?
Well, it's on and on and on and on and on. The beat don't stop until the break of dawn. I said a M-A-S, a T-E-R, a G with a double E. I said I go by the unforgettable name of the man they call a Master G. Well, my name is known all over the world by all the foxy ladies and the pretty girls. I'm going down in history as the baddest rapper that ever could be. Now I'm feeling the highs and you're feeling the lows. The beat starts getting into your toe. You start popping your fingers and stomping your feet and moving your body while you're sitting and you're sitting. Then damn, you start doing the freak. I said bam, right out of your seat. Then you throw your hands high in the air. You rock it to the rhythm, shake your dairy air. You rock it to the beat without a care. Cruise the short shot MCs for the affair. Now I'm not as tall as the rest of the gang, but I rap to the beat just the same. I got a little face and a pair of rhyme eyes. All I'm here to do, ladies, is hypnotize. Sing it on and on and on and on and on. The beat don't stop until the break of dawn. I sing it on and on and on and on and on like a hot butter. The pop, give it, pop, the pop, pop. You don't dare stop or come alive, y'all. Give me what you got. I guess by now you can take a hunch and find that I am the baby of the bunch, but that's okay. I still keep in stride, cause all I'm here to do is just a wiggle your behind. Sing it on and on and on and on. The beat don't stop until the break of dawn. I sing it on and on and on and on and on. Rock, y'all. Throw it on the floor. I'm gonna freak you here, I'm gonna freak you there. I'm gonna move you out of this atmosphere, cause I'm one of a kind and I'll shock your mind. I put the jiggles in your behind. I say the 1, 2, 3, 4, come on, girls, get it on the floor. Come alive, y'all, give me what you got, cause I'm guaranteed to make you rock. I said 1, 2, 3, 4, tell me one to Mike, what are you waiting for?
To the hip hop, the hippie to the hippie, the hip hip, the hopper, you don't stop. Rock it to the bang, bang the boogie, say up, jump the boogie to the rhythm of the boogie beat. Well, skittle bebop, we rock a Scooby Doo. And guess what, America, we love you, cause you rock in a row with us so much so you can rock till you're 101 years old. I don't mean to brag, I don't mean to boast, but we're like hot butter on a breakfast toast. Rock it out, a baby bubba to the boogie, then bang bang the boogie to the beat. Beat is so unique. Come on, everybody, and dance to the beat. Hip hop, you don't stop. Rock it out, baby, bubba to the boogity bang bang, the boogie to the boogity beat. I say I can't wait to the end of the week when I rap it to the rhythm of a groovy beat and attempt to raise your body heat or just blow your mind so that you can't speak or do a thing but a rock and shuffle your feet and later change up to a dance called the freak. And when you finally do come into your rhythmic beat, rest a little while so you don't get weak. I know a man named Hank. He has more rhymes than a serious bank, so come on, Hank. I'll sing that song until the rhythm of the boogie, bang, bang, the bomb.
When I'm pimp, the dimp, the ladies pimp, the women fight for my delight. But I'm the grand master with the 3 MCs that shock the house for the young ladies. And when you come inside and to the front, you do the freak spank, you do the bump. And when the sucker MCs try to prove a point with Trent's trio, or when the serious joiner from sun to sun and from day to day, I sit down and write a brand new rhyme because they say that miracles never cease. I've created a devastating masterpiece. I'm gonna rock the mic so you can't resist. Everybody, I say it goes like this. When I was coming home late one dark afternoon, reporter stopped me for an interview. She said she's heard stories and she's heard fables that are vicious on the mic and the turntable. This young reporter I did adore, so I rocked the vicious rhyme like I never did before. She said, damn fly guy, I'm in love with you. The Casanova legend must have been true. I said, by the way, baby, what's your name? Said I go by the name Lois Lane, and you can be my boyfriend, you surely can. Just let me quit my boyfriend called Superman. I said, he's a fairy, I do suppose, flying through the air in pantyhose. He may be very sexy or even cute, but he looks like a sucker in a blue and red suit. I said, you need a man who's got finesse and his whole name across his chest. He may be able to fly all through the night, but can he rock a party till the early light? He can't satisfy you with his little worm, but I can bust you out with my super sperm. I go do it, I go do it, I go do it, do it, do it. And I'm here, and I'm there. I'm Big Bang Hank, I'm everywhere. I just throw your hands up in the air and party harder like you just don't care. Let's do it. I don't stop, y'all. I take a talk, y'all. You don't stop. I go hotel, motel. And what you gonna do today? Someone get a fly girl, gonna get some spank and drive off in a death OJ. Everybody go hotel, motel, Holiday Inn. You say if your girl starts acting up, then you take a friend. I say skip, dive, what can I say? I can't fit them all in inside my OJ, so I just take half and bust them out. I give the rest of him the key so he can shock the house.
It was 12 o'clock and one Friday night. I was rocking to the beat, feeling alright. Everybody was dancing on the floor, doing all the things they never did before. And then this fly girl with a sexy lead, she came into the party, she came into the scene. As she traveled deeper inside the room, all the fellas checked out her white ass shoe. She came up to the table, looked into my eyes, then she turned around and shook her behind. So I said to myself, it's time for me to release my vicious rhyme. I call my masterpiece. And now people in the house, this is just for you. A little rap to make you boogaloo. Now the group you hear is called Phase 2. And let me tell you something, we're a hell of a crew. Once a week, we're on the street just to cutting the jams and making it free. For you to party, got to have the mood to we'll get right down and give you a groove. For you to dance, you got to be hot, so we'll get it right down and make it rock. Now if the system's on and the girls are there, you definitely have a rockin' affair. But let me tell you something, there's still one fact, that to have a party, got to have a rap. So when the party's over, you're making it home and trying to sleep before the break of dawn. And while you're sleeping, you start to dream and think of how you danced on a disco scene. A name appears in your mind, yeah, a name you know that was right on time. It was Phase 2, or just a doing a do, rocking you down, cause you know we good to the rhythm of the beat that makes you free. Come alive, girl, get on your feet. To the rhythm of the beat, to the beat, to the double beat that makes you freak. To the rhythm of the beat that says you go on and on until the break of dawn. I got the man coming on right now. He's guaranteed to throw down. He goes by the name of Wonder Mike. Come on, Wonder Mike, do what you like.
I say a can of beer that's sweeter than honey, like a millionaire that has no money, like a rainy day that is not wet, like a gambling fiend that does not bet, like Dracula without his fangs, like the boogie to the boogie without the boogie bang, like collard greens that don't taste good, like a tree that's not made out of wood, like going up and not coming down. It's just like the beat without the sound, no sound to the beat. You do the freak, everybody just rock and dance to the beat. Have you ever went over a friend's house to eat and the food just ain't no good? I mean, the macaroni soggy, the peas all mushed, and the chicken tastes like wood. So you try to play it off like you think you can by saying that you're full. And then your friend says, Mama, he just being polite. He ain't finished. Oh, that's bull. So your heart starts pumping and you think of a lie and you say that you already ate. And your friend says, man, there's plenty of food, so he piles some more on your plate. But while the sticky food's steaming, your mind starts to dreaming of the moment it's time to leave. And then you look at your plate and your chicken slowly rotting into something that looks like cheese. Oh, so you say, that's it, I got to leave this place. I don't care what these people think. I'm just sitting here making myself nauseous with this ugly food that stinks. Oh, so you bust out the door while it's still closed, still sick from the food you ate. And then you run to the store for quick relief from a bottle of KO Pectate. And then you call your friend 2 weeks later to see how he has been. And he says, I understand about the food, babe, but we're still friends. With a hip hop, the hippie to the hip, the hip the hopper, you don't stop the rocker to the bang bang boogie. Say up jump the boogie to the rhythm of the boogie beat. I said, Hank, can you rock? Can you rock to the rhythm that just don't stop? Or can you hit me to the shoot-be-doo? I said, come on, make the people move.
I go toot the horns and then ring the bell because I am the man with the clientele. And if you ask me why I rock so well in Big Bang, I got clientele from the time I was only 6 years old. I never forgot what I was told. It was the best advice that I ever had. It came from my wise and dead old dad. He said, sit down, punk, I want to talk to you. And don't say a word until I'm through. Now there's a time to laugh, a time to cry, a time to live and a time to die, a time to break and a time to chill, to act civilized or act real ill. But whatever you do in your lifetime, you never let an MC steal your rhyme. So from 66 to this very day, I'll always remember what he had to say. So when the sucker MCs try to jump my style, I let them know that I'm versatile. I got style, finesse, and a little black book that's filled with rhymes, and I know you want to look. But the thing that separates you from me, and that is called originality, because my rhymes are on from what you've heard. I didn't even bite, not a got word, and I say a little more later on tonight, so the sucker MCs can fight all night. I take a jock, y'all, a beat, y'all, and let's rock, y'all. Get no stop, go hotel, motel, or what you gonna do today? Say what? Cause I'm gonna get a fly girl, gonna get some spank and drive off in a death OJ. Everybody go hotel, motel, Holiday Inn. You say if your girl starts acting up, then you take her friends. I like that, y'all. To the beat, y'all. A beat, y'all. You don't stop. A Master G. A Mom Mellow is on you. So what you gonna do?
Well, like Johnny Carson on the Late show. I like fucking Crocker in stereo. I like the bar case singing Holy Ghost. The sounds I throw down, they play the most. Just like my man, a Captain Sky, who's named the Earn with the super sperm. We rock and we don't stop. Get off, y'all. I'm here to give you what you got to the beat that it makes you freak. Come alive, girl. Get on your feet. I like a Pappy Mason without a case, like Farrah Fawcett without her face, like the bar case on the mic, like getting right down for you tonight, like moving your body so you don't know how. Right to the rhythm and throw down, like coming alive to the Master G, the brother who rocks so viciously. At the age of 1, my life begun. At the age of 2, I was doing it too. At the age of 3, it was you and me, rocking to the sounds of the Master G. At the age of 4, I was on the floor, giving all the beats what they bargained for. At the age of 5, I didn't take no jobs with the Master G. All the way live. At the age of 6, I was picking up sticks, rapping to the beat. My thing was lit. At the age of 7, I was rocking in heaven. Don't you know? I went off. I gotta run on down to the beat to see, getting right on down, making all the girls just take off the cuffs to the beat to the double beat that makes you free. At the age of 8, I was a really great, cause every night you see, I had a date. At the age of 9, I was a right on time, cause every night you see, I had a party rhyme, going on and on and on and on and on. The beat don't stop until the break of dawn. It's staying on and on and on and on and on like a hot plate. Pop, on and on, you don't dance, stop a rock, yo. Give me what you got, cause I'm a hell of a man when I'm on the mic, and I am the definite freaks to lie. I'm a hell of a man when I'm on the mic. I am the definite freaks to lie. You call me the Master G, you see, the brother who rocks so viciously. What a man, yeah, what a man, yeah. Out of this every year, cause I'm all the kind of rock shots to rock. I'm on to the G's and the young behind. The best Master G, get it on, taking all the girls. Going down, come on, come on, shot in my mind, come on, yo.
Yes, who's back? Back again. Shady's back. Tell a friend. Guess who's back? 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 Na 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 na. I've created a monster, 'cause nobody wants to see Marshall no more. They want Shady, I'm chopped liver. Well, if you want Shady, this is what I give you. A little bit of me mixed with some hard liquor, some vodka that'll jumpstart my heart quicker than a shock when I get shot at the hospital by the doctor when I'm not cooperating. When I'm rocking the table while he's operating. Hey, you waited this long to stop debating, 'cause I'm back, I'm on the. I know that you got a job, Miss Cheney, but your husband's heart problems complicating, so the FCC won't let me be, or let me be me, so let me see. They try to shut me down on MTV, but it feels so empty without me. So come on, dip, bum on your lips, jump back, jiggle the hip, and wiggle a bit and get ready, 'cause this is about to get heavy. I just settled all my lawsuits. F you, Debbie. Now this look like a job for me, so everybody just follow me, 'cause we need a little controversy, 'cause it feels so empty without me. This look like a job for me, so everybody just follow me, 'cause we need a little controversy, 'cause it feels so empty without me. Little hellions kids feeling rebellious, embarrassed. Their parents still listen to Elvis. They start feeling like prisoners, helpless, till someone comes along on a mission and yells, bitch! A visionary vision is scary. Could start a revolution, polluting the airwaves, a rebel. So just let me revel and bask in the fact that I got everyone kissing my ass. And it's a disaster, such a catastrophe for you to see so damn much of my ass. You asked for me, well I'm back. Na 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 na. Fix your bend antenna, tune it in, and then I'm gonna enter in up under your nails like like a splinter. The center of attention back for the winner. I'm interested in the best thing since wrestling, investing in your kids' ears and nesting, testing. Attention, please feel the tension. Soon as someone mentions me, here's my 10 cents. My 2 cents is free, a nuisance. Who sent you sent for me? Now this looks like a job for me. So everybody just follow me, cause we need a little controversy, cause it feels so empty without me. This looks like a job for me. So everybody just follow me, cause we need a little controversy, cause it feels so empty without me. A tisket, a tasket, I go tit for tat with anybody who's talking this and that. Chris Kirkpatrick, you can get your ass kicked worse than them little Limp Bizkit bastards. And Moby, you could get stomped by Obi. You 36-year-old bald-headed me, you don't know me, you're too old, let go, it's over. Nobody listens to techno, now let's go, just give me the signal. I'll be there with a whole list full of new insults. I've been dope, to stencil with a pencil, ever since Prince turned himself into a symbol. But sometimes, man, it just seems everybody only wants to discuss me. So this must mean I'm disgusting, but it's just me, I'm just obscene. Yeah. Though I'm not the first king of controversy, I am the worst thing since Elvis Presley to do black music so selfishly and use it to get myself wealthy. Hey. There's a concept that works, 20 million other white rappers emerge, but no matter how many fish in the sea, it'll be so empty without me. Now this looks like a job for me, so everybody just follow me, cause we need a little controversy, cause it feels so empty without me. This looks like a job for me, so everybody just follow me, cause we need a little controversy, cause it feels so empty without me. La 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 kids. Yes. Who's back? Back again. Shady's back. Tell a friend. Guess who's back? 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 Na 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 na. I've created a monster, cause nobody wants to see Marshall no more. They want shady, I'm chopped liver. Well, if you want shady, this is what I give you. A little bit of me mixed with some hard liquor, some vodka that'll jumpstart my heart quicker than a shock when I get shot at the hospital by the doctor when I'm not cooperating. When I'm rocking the table while he's operating. Hey, you waited this long to stop debating, cause I'm back, I'm on the. I know that you got a job, Miss Cheney, but your husband's heart problems complicating, so the FCC won't let me be, or let me be me, so let me see. They try to shut me down on MTV, but it feels so empty without me. So come on, dip, bum on your lips, jump back, jiggle the hip, and wiggle a bit and get ready, cause this is about to get heavy. I just settled all my lawsuits, F you Debbie. Now this look like a job for me, so everybody just follow me, cause we need a little controversy, cause it feels so empty without me. This look like a job for me, so everybody just follow me, cause we need a little controversy, cause it feels so empty without me. A little hellion friends' kids feeling rebellious, embarrassed that parents still listen to Elvis. They start feeling like prisoners, helpless, till someone comes along on a mission and yells, bitch! A visionary vision is scary. We start a revolution, pollute in the airwaves, a rebel. So just let me revel and bask in the fact that I got everyone kissing my ass. And it's a disaster, such a catastrophe for you to see so damn much of my ass. You asked for me, well I'm back, na-na-na-na-na-na. Fix your bend antenna, tune it in, and then I'm gonna enter it up under your nails like a splinter. The center of attention, back for the winner. I'm interested in the best thing since wrestling and festing in your kids' ears and nesting, testing. Attention, please feel the tension. Soon as someone mentions me, here's my 10 cents. My 2 cents is free, a nuisance. Who sent you sent for me? Now this looks like a job for me. So everybody just follow me, cause we need a little controversy, cause it feels so empty without me. This looks like a job for me. So everybody just follow me, cause we need a little controversy, cause it feels so empty without me. A tisket, a tasket, I go tit for tat with anybody who's talking this and that. Chris Kirkpatrick, you can get your ass kicked worse than them little Limp Bizkit bastards. And Moby, you could get stomped by Obi. You 36-year-old bald-headed me, you don't know me, you're too old, let go, it's over. Nobody listens to techno, now let's go, just give me the signal. I'll be there with a whole list full of new insults. I've been dope, to stench forward a pencil, ever since Prince turned himself into a symbol. But sometimes, man, it just seems everybody only wants to discuss me, so this must mean I'm disgusting, but it's just me, I'm just obscene. Yeah. Though I'm not the first king of controversy, I am the worst thing since Elvis Presley to do black music so selfishly and use it to get myself wealthy. Hey. There's a concept that works, 20 million other white rappers emerge, but no matter how many fish in the sea, it'll be so empty without me. Now this looks like a job for me, so everybody just follow me, cause we need a little controversy, cause it feels so empty without me. This looks like a job for me, so everybody just follow me, cause we need a little controversy, cause it feels so empty without me. La 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 kids. Yes. Whoa.
Now let's rock and roll. How's that? Can you hear me?
Of course we can hear you.
All righty. Perfect. Well, let's rock and roll. Hope everyone had a good lunch. This is fun. We're making a TV station live here. So our next guest is very exciting. So if you guys have been sitting on Bitcoin for years, Callan's going to tell you why you shouldn't have been doing that, and that is lazy Bitcoin holding. So Callan from Threshold Labs, welcome to the Daily Stack.
Pleasure to be here, guys. Thanks for having me on.
Of course. Callan, let's get into it. So we've had a huge macro day today, and we've jumped into the long-term yields in Japan, and we're not going to quiz you on what the 30-year in Japan's doing, But we do want to start the day with just a sentiment, a vibe check on, from your experience. You're working in the Bitcoin space. You know what the charts are doing. What's your feeling going into 2026? How do you feel about Bitcoin sitting at 89,418 is what we have here. And then what do you expect, in the next quarter?
Yeah, I mean, it's a big question, really. I think we're in completely uncharted territory as far as Bitcoin price discovery goes, but we're also in this new era of Bitcoin, it seems. Like we saw last year, the DATs really taking off in a new way, a lot of institutional interest, and Bitcoin entering the mainstream in a way that it hadn't in the past. And of course, a change in the regulatory environment as well, introducing more certainty, or at least less ambiguity in how Bitcoin's going to be treated. And I think that has some positive outcomes for Bitcoin as an asset. But in terms of price predictions and things like this, I'd really try to keep a long-term perspective, because I think Bitcoin is something that's going to be here for generations. And it can, really be a tough time emotionally sometimes if we tune in a little bit too closely. But looking at, the 5-10 year horizon, I think things look pretty good.
Yeah. What's your Bitcoin story? We always like to start with that, too, to know who we're talking with. I'm class of 2017. I think Jody is around the same. Both software sales guys fell into it and haven't looked back. But everyone's got a pretty interesting story, so I'd love to hear.
Yeah, similar class of 2017. Yeah, my story, somebody actually tried to get me in on a crypto scam as an intro to the space, and it didn't sit right originally. So I quickly Googled and learned about Bitcoin and Ethereum and all the interesting things that are going on in decentralized systems. And I think that was really the penny drop moment for me, is like understanding that now there is a new type of money. It's non-governmental, it's kind of sovereign in its own right. It's unstoppable. Anybody can access it, anybody can use it. And I think that paradigm has incredible implications globally. And for me, there was this moment where I saw this kind of new utility that global finance could access, and it would really change the dynamics that had played out in traditional finance. And I think creating new opportunities, new ways of thinking about human collaboration. And I saw that vision when I first got into the space, and it got really excited. At that time, I was still studying at university. I was studying electrical engineering and computer science. And believe it or not, that wasn't interesting enough to keep me in as soon as I learned about Bitcoin. And I had to go deep into it and fully immerse myself. And so I dropped out of university after about 3.5 years and started a company working in the crypto space. And I ran that for about 4 years. It was data analytics and financial reporting, kind of unpacking the core of the technology on chain, like to understand how these things are being used in the early stages of DeFi, but also the ICO stuff that was happening on Ethereum. It was quite an interesting time. But the Bitcoin relationship with me, I always saw Bitcoin and the broader crypto ecosystem as quite synergistic, because these are rails where Bitcoin can live and operate in this new environment. Where if we have just Bitcoin mainnets and all it's doing is changing balances, then we're going to rely on some kind of centralized system if we want to add utility. So I always saw these as quite harmonious. In 2022, I started getting involved with the Threshold DAO. I was actually an early community member, but kind of stepped into this new role on the Treasury Guild. And that Treasury Guild, it had an initial kind of liquidity bootstrapping program. And it was just our network token and an Ethereum pair. But then TBTC V2 dropped, which is one of the key product at Threshold. And then suddenly we had this explosion of on-chain liquidity that I started to manage, and I went through the bootstrapping along some of the kind of senior leaders of the team that was originally behind the TBTC protocol. And we bootstrapped TBTC on-chain to about 600 mil in TVL. And I saw that grow and was really, really great project to be a part of, seeing the on-chain bootstrapping of a brand new asset effectively in terms of the liquidity, even though we're riding on the coattails of Bitcoin. And And then, yeah, I worked in another Bitcoin startup in 2024, which was an interesting experience as well, learning a lot more about the core tech. And then at the start of last year, we spun up Threshold Labs, which basically took over the protocol and product development for TBTC. And we've been running that for nearly a year now, and I'm really excited about what we're working on. So that's the TLDR.
So as a community member, is starting in the Discord what people used to say is starting in the mailroom. It's like you're starting at the very bottom, you're chopping it up, you know, with all the 9-to-5ers, blue collar, and you understand it, and then you know you get pulled up. Like it sounds like you were committed enough. They saw you as bright, and they're saying, "Hey, like we need you to be working on this full time."
Yeah, exactly. You know, when you join a community like that, you're pseudonymous, and you just have you know, your name and your output is effectively what you're being evaluated against. So if you're showing up and you're creating value, and you know, you have some experience and insight that you can share, then it gets recognized. And Threshold was a really awesome, and still is a great community, where there was this opportunity to kind of step in and learn just from the open documentation, the meetings that were held in public, and these different pieces of a DAO that can be so accessible. And basically jumped right into that role and took that opportunity to get more involved.
I want to go to a quote you said. Bitcoiner, you know, Bitcoin can be lazy, right? I don't know if that's the verbatim quote you said, but it caught my eye, right? And I think it catches anyone off guard. But when you think about it, like that's why we started the Bitcoin Economy podcast initially, is we saw, you know, there's yield products being coming into the market. There's credit cards, debit cards. There's a million different real estate, life insurance. You know, we're seeing this just complete explosion across the board with Bitcoin products. And so that's why we brought you on as well. We thought it was interesting, but can you dive into that? What you mean by that is, like, you know, it's no longer just buy and hold, right? So what do you mean by Bitcoiners are lazy, and how do you become unlazy?
Right. Yeah. Well, apologies to Bitcoiners. I'm sure in many respects you're not lazy, but in terms of the use of Bitcoin, I think people can be very, very conservative, and I think that's a very reasonable approach. Just fundamentally, like, you don't need to move quickly in a space that's going to progress gradually over the next, you know, hundreds of years, ideally. But you know, the asset sits idle for the most part. It's generally just sitting in a hardware wallet, hopefully, or on an exchange, less ideally. And it's not a productive asset in and of itself. It's kind of like gold sitting in a treasure chest in your backyard. And then there's nothing wrong with that fundamentally. I think that it's something that is necessary so that we have this alternate kind of store of value solution that's out there that everybody can access. And I think that's a great utility in itself. But if it's always a store of value, how do you access the capital value of that Bitcoin at the end of the day? And, you know, for example, you get into Bitcoin early or now, and in 50 years, you're sitting on a small fortune, and, you know, relatively speaking, and you want to do something with that. Of course, you don't want to sell your Bitcoin. I think that's something that's, you know, most people aren't really all that interested in, because they'll never accrue it back in effect as the trajectory of the price continues to grow. But there are other ways that you can use that Bitcoin that doesn't require you to sell it. And that's fundamentally something that Threshold has developed. And that's what TBTC is effectively. You can think of TBTC as, you know, a one-to-one version of Bitcoin, but it's, instead of being on Bitcoin mainnet, it's in the decentralized crypto financial ecosystem on chains like Ethereum and Solana and Starknet, these kind of places that are actively building these new tools and new financial markets that you can use Bitcoin in, but it doesn't require you to sell that Bitcoin, but it does require you to do something with it, I suppose. And I think, you know, there's a lot of opportunity to do that kind of thing, but it has to make sense for the individual, and everybody has their own thesis. There are, you know, opportunities out there that you can earn money with your Bitcoin. You can earn more Bitcoin. You can stack sats, as it were. And there are lots of things that we're building that can support people to do that. And at the same time, you know, having a core part of your Bitcoin assets sitting in that treasure chest in your backyard or whatever it might be is a very sound strategy as well. So I wouldn't say that, you know, we need to make it all productive. We need to put it all to work all at once. But having a small portion of your Bitcoin stack where you can either like borrow against it and buy something that you need, or smooth out your cash flow at short notice, or, you know, you're accessing some of the utility that's inherently there, instead of having to deposit your Bitcoin into an exchange or sell it, you have this utility where you can maintain the custody in the sense in that you're maintaining your own keys, and you're also accessing the utility without selling. And I think there's a real use case and reason why people would want to do that in a practical sense.
The hot thing I think we've seen is we have predicts on Tuesday, and they're like a Lightning based prediction market. And if you think about stable coins, right? So, I think Avi's going to get into the Clarity Act as well. But, people on Polymarket or Kalshi are sitting with just a USDC balance, and that's someone parking their capital in, USDC. And, Circle is able to go out and get 5% or, whatever the interest rate is. And then they get net interest margin, whatever they pay you out. And a lot of times they're not always paying you out on, what that amount is. So you have just capital that's sitting in a balance, either on Robinhood or Polymarket or Kalshi or any other prediction market. And from what it sounds like, this is a way where, I can keep the exposure to Bitcoin on the upside, but I'm able to move it between these platforms in a very, interoperable way, and not have just, it's sitting in treasuries where they're making the money, right? Tether makes a ton of money and you're not getting any upside from that. You're just holding $1 and it's going to be pegged to the dollar, versus you should be holding Bitcoin. And then I think more platforms should be able to handle not just holding USDC, but hold, something like a TBTC where the users still participate in the upside, especially in a volatile time like now.
Absolutely. I think that's where we want to get to, right? Excuse me, the Bitcoin economy at large, when we start to denominate our balances and our net worth in Bitcoin as opposed to USD, the trading happens in Bitcoin. And I think in order to get to that point, you need to have utility. And I know there are people out there that already denominate in Bitcoin and they're really long-term focused. But that's how we kind of get to that point, I think, is creating the different places that you can allocate and create useful scenarios.
Yeah, we've seen, I was just looking this up too to see if it's possible. And I could be wrong here, but I don't think it is possible to buy. So Stretch, for example, was a product that Strategy has rolled out, which is, I think it's at between 10 and 11%, right? So that's taking a Bitcoin proxy, essentially. It's not Bitcoin itself, but you're getting that upside, and it's kind of this income producing tool, if you will. As you go up the risk curve, they have STRD, which is the most risky, right? But there's the most opportunity, right? So what are you guys looking at just overall from percentages, yield? What opportunities exist for someone with Bitcoin, and how do you guys de-risk that, right? Because that's anyone's concern. We've seen it millions of times, unfortunately, in this industry. But curious what you guys do, and how can someone fail using you guys as well?
Right, absolutely. I mean, there's a whole landscape of different opportunities that are emerging, and they all have their own different risk profile. I'd say that it's still reasonably early in that space as well. So the quantification of risk and some of these things is hard to evaluate. But if you were to allocate your Bitcoin, there's some things there's no native yield on Bitcoin, of course, but there are these kind of Bitcoin staking products that are out there. And what that is effectively doing is using your Bitcoin as collateral. You're posting that collateral to secure a blockchain network. We've got Starknet staking. We have Meso staking as well. These are layer 1 chains or ETH2s that are able to use Bitcoin and TBTC as that collateral asset. So effectively, you're providing economic security in these environments for providing that collateral. You can earn a yield based on that. So in terms of the financial risk, that's quite low. I'm not really commenting on the security of the protocols themselves or the platforms themselves, despite me having no concerns about that personally. But there's no rehypothecation or leverage or lending that's exposing you to counterparties through those strategies. So I consider that relatively low risk. And then we have this emerging ecosystem of vaults and strategy managers. There's on-chain vault products and basically financial management tools that you can deposit TBTC into, and then you have some asset manager that is basically using TBTC on-chain to generate a yield. And it could be that they're borrowing USD against that, and then they're using that in some kind of perp trading strategy, delta neutral strategy, and that's delivering yields back to that vault. So that's one that, while the strategy can be delta neutral, so you're kind of hedged out against Bitcoin price risk, you're still exposed to the management strategy and the counterparty risk of that asset manager. In theory, it's not quite the same as you just giving somebody your Bitcoin and they just go do what they want with it. These on-chain vaults are really powerful because you can set the constraints of what kind of actions are actually possible within that vault. So you could deposit TBTC into that, for example, and the only actions that vault can take is borrow USD within this kind of fixed ratio and then allocate that to some kind of perp dex. So you could really define the scope and the risk of the strategy in that sense. But there are layers. There's the contract risk and these platforms and liquidity risk and these kind of things, like they can get liquidated in a black swan event. So they're certainly not risk free. But I think as that space continues to develop, as well as this institutional product space building out, they're going to be more regulated, and I think that will also reduce the risk. So, and then alongside that, if you're more savvy and DeFi native, then perhaps you can go and manage your own liquidity in a liquidity pool. You're managing maybe a TBTC USD pool, or just a TBTC and another Bitcoin wrapper. So they're kind of they're pegged to each other. So the impermanent loss is not something that you need to be too concerned of. And so there are ways that you could kind of go in depending on your skill level and do that. But I think as we progress, like the abstraction that's on top of these core systems will continue to develop such that we don't have to go and deploy these ourselves. Perhaps we don't even see a vault at the end of the day. Perhaps we don't even see TBTC. And it's just an integration on a platform that people are more familiar with. It has a Web 2 kind of user experience, but under the hood, you've got TBTC, you've got all the power of DeFi and the liquidity accessible there. And I think people call it the DeFi mullet, as it were.
Yeah.
It's interesting. I was thinking about this, and it's one of those things where you go to these conferences, you look around, and you're like, all right, how many of these companies are going to be around next year? So you brought up something just now that, do you foresee this, a lot of these L2s kind of being sucked into these bigger consumer-facing apps behind the scenes and kind of being like acqui-hired for their technology? Because there's so many that people, use for airdrops and then no longer use, and, and they're kind of great technology potentially, but just not the use cases. So I was curious just in general where you see this going.
Yeah, I think the liquidity really kind of dictates the trajectory for people. And we work in a space that is diverse in terms of people's intentions, is maybe a nice way to put it.
There's a lot of scammers out there.
Yeah. So I think, we work with some teams that we've worked with for a long time. They have deep integrity. They've been in the space for a long time. And I know that they're going to put everything that they can into building the best product. And that's like a matter of pride and something that they're wanting to do because they believe in the vision of Bitcoin, and they're seeing the need for tools and better execution environments. And so there are projects that I back and that I believe they'll do everything that they can. Ultimately, they need to meet the market where it is and attract the liquidity that is available there. And it means building to a certain kind of specification and finding product market fit. If products don't do that, or they're not serious builders, or they're not making the right connections, they're not seeing the right vision, as it were, then I think it's very likely that many of these L2s and smaller chains will fold. But if they continue to build and they're serious about that, then I think a lot of them can succeed, and there can be a plurality of execution environments, different blockchains in which serious financial transactions are done. Ultimately, maybe there's going to be an acqui-hire, maybe there's something that gets folded in. Ultimately, I think they'll all be abstracted, like in the sense that people won't have an Ethereum wallet. They won't necessarily interact with the smart contracts or the apps directly, and there will be something much more similar to the internet, where we have this kind of multi-purpose general communication layer. Maybe these chains are them, maybe there are multiple different communications, maybe there are multiple APIs, whatever it may be, that's integrate at the app layer, so the user experience becomes much better. But then there'll be this optimization in terms of who can deliver the best liquidity, the lowest fees, the lowest slippage, and this will be a kind of competing based on these values that that will continue. So optimizing for what the market actually needs. They need efficient markets. They need great utility in their use cases as well. And we're going to continue to develop the product space to try to keep ahead of that. And I think everybody that's a serious builder is trying to do the same at this moment.
So one thing I want to pull up, I thought was interesting is, oh no, how close this is, but this is one of your tweets this is May 27th of this year. And this is a Michael Saylor explanation of where he's talking about proof of reserves. So this is rehashing, something that was hammered last year as a topic, as a trending, point of contention between people that are saying paper Bitcoin for every Bitcoin treasury company, and those that are pro treasury companies that are obviously defensive of MSTR as the granddaddy of them all. So in your eyes, and looking at technology built on Bitcoin, you're looking at zero knowledge proofs as, hey, this is where I understand what Saylor's saying of there are risks. There is a big market shift or movement and drop that could happen if we had the keys available, we had the public addresses available to see what Saylor and the great corporate finance team at Strategy is doing, and if they're moving between custodians or it looks like they're selling, that's going to major impact on the market. But people want proof. People want to feel good. It's also decentralized. That that's the core nature of Bitcoin, is that not trusting but verifying. Can you talk a little bit about what you're thinking of as a good solution on the zero knowledge proof side for proof of reserves?
Sure. Yeah, I suppose it's a way, like, if people aren't familiar with the zero knowledge proof, it's a way of proving a piece of data without revealing the piece of data itself. So I for example, I could, if I had a zero knowledge ID card, I could prove that I'm over 18 years old without needing to show my birth date. And in this example, they have obviously reserves of Bitcoin, or I guess that's what people are wanting to know. And they could be able to prove that they own the keys. They could sign a message, for example, that says, Michael Saylor owns this Bitcoin. They could prove that the balance is of a certain amount. Maybe it's not the exact amount, but it's above a certain threshold, and they could construct a proof such that they can give a very close indication of the exact balance. They could construct it how they wish, and they wouldn't need to reveal the public key. They wouldn't need to reveal the balance of that address, and we would still have a cryptographic proof that they own those assets. So I think that these are things that, when you're talking about a company like MicroStrategies, it's so big, and the operations are still centralized. We're talking about a traditional company in that sense, and in that way, there are people, there are operations, there are buildings, there are signing cadences and these things that I think can have real world impact. And at the other side of it, we have something like Threshold, where we don't have a centralized system. There isn't that same signing cadence of people going to places, and as it were, we have automated, decentralized infrastructure that's operating the Threshold network. And in that way, we're able to publish fully our proof of reserves. We have the addresses on chain. You can go there, you can see the balances, you can see the live transactions coming in and out of the network. And that isn't a compromise on security for us, because it is a decentralized system. So I think while there are different scenarios where it makes sense, I can understand where they're coming from in that way, because frankly, it's a lot of Bitcoin. And if something were to go wrong, like, Bitcoin transactions are a one-way door, for better or worse, and that would be catastrophic without a doubt. So keep it safe, Michael.
Yeah. We need you working on that next.
Yeah, I mean, he's getting to the point too from their stock perspective. He's the key man, just like Elon Musk. If, like, God forbid something happened to them, that's a huge. I don't know if it would go down as much as Elon, given that they have the Bitcoin still, but yeah, it is something that I don't think is talked about quite enough. Now, on those same lines, like with the institutions coming in, you see BlackRock, Fidelity, Vanguard now even as well, right? These are some big players coming in, which I find exciting. It's a whole, allows my parents to now invest in Bitcoin where they couldn't click a button on Coinbase if that's too hard, right? But it allows a lot more money in 401ks, IRAs, et cetera, to come in. Now, how important is a decentralized bridge like Threshold now, with Bitcoin being the beauty of it being decentralized, starting to feel a little more centralized? That happened with miners as well. Now we're seeing it happen with Bitcoin, with iBit and everything that BlackRock's making. So curious, like from your perspective, you're obviously on the DeFi side of things, so would love your take.
Yeah, I think it's really interesting times, and this crypto cycle that we've been living through for the last nearly 10 years or since we joined the space. It's always started with Bitcoin, and then there's been an outflow into the DeFi space or other crypto assets, as it were. And because of this new on-ramp through iBits or through any of the ETFs, DATs, whatever it may be, we're not seeing people own that Bitcoin per se. They're owning a share in the fund. And I think that has had a significant impact on that flow-on effect into the broader crypto economy. So that's one element of it, I suppose. Sorry, I've just had a mental blank. Give me one moment.
Yeah. So do want to pause here for Arch. So we just had them on here as a great interview. They're a big lender, and they just announced the 75 million CLO. So we're excited to announce them as a partner of the Daily Stack and a sponsor, so we can keep bringing you content, keep bringing you people like Callan. We also had a wonderful guy, Infra, and Dave Weisberger, who's super popular on Spaces. And there's amazing I think group, and there's a building around the Bitcoin economy, and I love that they've been very transparent when we've been working with them. And just like with, I know you guys, when we talk about custody, it's like they've been focused on like working with like Anchorage Digital on the qualified custody piece. So I'll lead you that way. Is like, how do you guys think about custody different than WBTC? I know that there was some drama last year when Justin Sun got involved, and BitGo was historically the holder and the custodian of WBTC, and then BitGo, who just went public, was it yesterday or today, is now started working with Tron, and they were going to hold, be involved in the key signing process of the Bitcoin that's held for the wrapped Bitcoin that can be used on chain. How did that affect your product vision? Like, that has to be, the driving competitive force for Threshold, right?
Absolutely. And sorry, I just remembered my thread. I'll circle back just quickly. I think that the on-chain element of Bitcoin gives access to these global markets that are emerging. It's my opinion that it's going to attract the liquidity that will outpace other markets effectively. So if we want to have the most liquid Bitcoin products out there, I think it will be on-chain ultimately, because of the speed of execution, the composability, and these things. So, but in terms of like the WBTC and the custody piece, and yes, the BitGo drama, I think for us, we're structured quite differently. So BitGo, centralized custodian, I think now it's 3 entities involved. That I'm not exactly certain what the distinction is between them, but they have WBTC, and the custody is within those entities, and the mint and burn flow goes via those entities. So you sign up to BitGo, you KYC with your account, you deposit your Bitcoin, you commit WBTC. And that's not necessarily a programmatic process. So you have to go and press some buttons on a platform and go and do that. Threshold has a different custody model. What we have live right now is a distributed key generated Bitcoin custody system. So we have a multi-sig that's on the Bitcoin network. It's a 51 of 100 multi-sig, and that's operated by decentralized nodes in our network. So there's a kind of a ceremony that they hold where they create new keys, create a new wallet, they accept deposits into that wallet, and that is what TBTC is minted against.
Mm-hmm.
So we have this different custody system, and it's a fully permissionless and decentralized custody mechanism. So what that means is that rather than signing up to a BitGo account per se, you can directly deposit your Bitcoin into an address that's generated in a decentralized manner by the Threshold network, and that Bitcoin goes in, and then the TBTC arrives in your on-chain account, whichever chain that may be that we're live on. And that gives a permissionless path in and out. So actually we see a lot more volume relative to our TVL than WBTC in terms of the mint burn flow. And I think this is a really interesting point because that's the main capital flow in our perspective of Bitcoin into that decentralized economy. And the barriers to entry are much, much lower in terms of user experience, in terms of programmability. For example, you could integrate the TBTC SDK in your application. It could be a Bitcoin wallet, it could be a neobank or something like this. There's Bitcoin there. And then under the hood and programmatically, you can deposit that Bitcoin via Threshold Network into an on-chain position, whether it's a vault like we talked about, staking, or something that you're going to go and do manually yourself. So they're quite different from a product perspective. And I think the scope of the integration space for us is much larger. It's more like a native kind of DeFi integration for Bitcoin than it is like a centralized custodial product. But where that has struggled in the past is kind of that point exactly, in that it's a decentralized system. It relies on this node software and smart contracts. And to the traditional financial sector, that can be harder to underwrite, be harder to understand. Whereas you have something like BitGo, where they have a centralized counterparty that can shoulder some of the risk burden in quantifying that Bitcoin deposit for the fund or the asset manager, as it were. So what we're actually developing is a dual custody system where we have the decentralized mechanism, permissionless and programmable, which is kind of core and the core mechanism through which TBTC is minted. And then alongside that is a parallel minting system that we're in development. And that will effectively allow for a custodial minting path of TBTC as well. So in that sense, you have the BTC deposited into a qualified custodian. You guys mentioned Anchorage Digital. These are the kind of guys that we want to work with in this regard. Have your Bitcoin deposited into the custody account there. There's some agreements in place. And then that TBTC, that BTC can be used as a balance to mint TBTC. So we're really expecting to be on par, if not accelerate ahead of these other custodial partners, because we can go multi-custodial, multi-jurisdiction, and we already have that permissionless on-ramp and programmability that these other players don't prioritize in their development.
So when you guys think about like partnerships, is there a world, and I was just thinking through this with like Robinhood or like Square, like something there, Cash App, right? Like, would they ever offer something like this through you guys? And like your current clients, would they not like that because that feels more centralized? Like, how does that conversation, because they have so many millions of users that could then come in. So how do you guys tackle that as a founder and thinking through this?
Yeah, I think there's kind of different situations for different users. Some people want the permissionless path. They prefer, they're the kind of person that wouldn't use centralized custody anyway. So they have the permissionless bridge that they can use. And as far as a platform like Robinhood, I'm actually not entirely sure what their licensing is, but I know, for example, like Anchorage Digital is a bank under a banking license in the US. I'm not sure if Robinhood's the same. So evaluating those custodians that could actually integrate with TBTC would be setting a very high standard in terms of that. But what we've kind of come across is that these huge institutional capital flows, they are coming through these platforms. There is a lot of interest in that. We've done a lot of groundwork in creating a very broad ecosystem of TBTC products, but there is this convergence taking place between these decentralized rails and the more traditional financial system. And we need to be aware of that, and we need to be ahead of that curve as well. So if we ignore that forever, then the IBITs or the DATs, they're not really going to want to allocate to TBTC, the permissionless bridge, because of the counterparty issue that I highlighted earlier, and the custody issue. So if we miss that order flow in terms of our own liquidity growth, then I think that we're putting ourselves at a disadvantage. So there needs to be some kind of hybridization, I think, where we have the utility and programmability, the transparency, which we can offer on a level that any of these other players can't, because we're still maintaining the transparency of the system, always posting a proof of reserves, always having the transaction volume, transaction details live and verifiable. And so in that sense, we kind of thread the needle, I think, quite well between having that permissionless branch, the decentralized ecosystem, maintaining that, and having a synergistic model where we can also allow for institutional capital flows.
Yeah. All right. So as we wrap this up, Callan, what can you leave us with? What should we be excited about? What's the best way to follow you guys? As you mentioned, like sometimes, we're talking news every day and it's not always something that gets people to care, but then they hear something like the Michael Saylor thing. Like, oh, okay. Like that's what the whole zero knowledge, buzzword is about, is like, having a use case where people would feel and sleep better, a lot better at night, knowing his coins are there, but then not giving away any public addresses, that everyone see. So what is like the way that we get people to care about what Threshold's doing, TBTC, and leave us with that?
Yeah, I mean, it really depends on what someone's interests are. If they're the Bitcoin type, then I would encourage them to try using DeFi, try using a little bit of their Bitcoin and seeing how this could work underneath the hood. And I wouldn't say necessarily to allocate themselves or become a trader or a strategist like that per se. But I think for me, it's the penny drop moment of where the utility lies and how we can create value and actually build an economy for Bitcoin, that we don't start relying on, Michael Saylor's promise that the Bitcoin's there. We can build a system on top of the same principles of Bitcoin that's transparent, robust, globally inclusive, that is going to allow for that economy to emerge effectively. So I think we're still early. I think for most people, as in terms of adoption, we're not going to have people managing their own keys. I think, as sad as it is to me, that story for me is kind of dying, and people will use a Web2 kind of app experience. So hopefully in the future, everybody's using Threshold and nobody knows about it. But if you want to get ahead of the curve and start to see the value that's being developed here, then I would really check out what we're building. You can find us on socials. That's at the T Network, which is our Threshold Twitter account, or you can search Threshold and put some Bitcoin to work, see what's being developed in the on-chain economy and get ahead of the curve.
Callan, thank you so much for joining today. And everyone listening, thank you for listening. Tomorrow, we have a great guest who's literally writing the book on the transition into corporate finance of the financialization of Bitcoin. So Allard Peng, Jody, if you want to add anything, I know he was your guest that you wanted to bring on.
Yeah, Bitcoin asset research. He's got a lot of good stuff. He weighs in pretty well on Saylor, what he's doing with Stretch and Strike, and I think he's also looking at Bitcoin options flow, if that's a point of interest, to see how much that moves the market. So definitely tune in tomorrow, 12:30 Eastern.
Very cool. We're wrapping it up. Thanks for joining.
Yeah. Thank you.
Pleasure, guys. Thanks.